What is up, everyone? We are back. Another episode of Benzinga Live. Happy Tuesday. Hope everyone had a good Valentine's Day yesterday or whatever you were celebrating, day after the Super Bowl. Who knows? Either way, we've got a packed show for you today. Joining me in a few minutes will be David Green. We're going to be live trading with him. Then we've got Laureen Gilbert at around 12:15 p.m. Eastern. Then Josh Snow. No, not Jon Snow. Josh Snow at 12:30 p.m. Eastern. Robert Roy will be joining us after that. James Doris from Viking will be joining us at 1:20. And then someone from Mawson, a Bitcoin miner, I believe, at 1:45 p.m. Eastern. So I don't know. What is that, Rohan? Like 6, 7 guests? I don't know. We've got a packed show. So enough of me bloviating. There we go. Let's go ahead and get it rolling. I clicked the wrong button. Sorry, guys.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. All right, guys, without further ado, I'm going to go ahead and bring on my man, David Green. I see he's already got his charts pulled up, so he's ready for us. If you've got tickers you want us to check out, just throw them in the chat. Let's go ahead, get Mr. DG on the stream. How you doing?
Welcome. Good afternoon, everybody. Happy Tuesday. Tuesday? It's Monday.
Tuesday.
Tuesday.
It's only Tuesday.
So I'm wondering if anyone knows what the stats are, depending on who wins the Super Bowl, what the market does. I know there's a study out there that shows if the AFC or if the NFC wins, the market does something.
Really?
Yeah. We'll see what happens. What's up, MD? So today, guys and girls, NVIDIA has been our big focus.
Well, one of the things on my radar from the Super Bowl was, you saw the Coinbase ad?
Yes, I did. That little thing bouncing around?
Yeah, exactly. Coinbase, the app on the App Store, on the Apple App Store, went from number 182 to number 2.
Yeah, I saw that.
I mean, that's not, unheard of, but it's not bad news for Coinbase. And I mean, now you got Ethereum and Bitcoin doing well, so Coinbase kind of was on my radar this week.
Yeah. No, that was a cool commercial. When I was watching the commercial, I'm like, this is the stupidest thing I've ever seen. But I guess it was genius, right?
Yeah.
Okay, here we go.
Yeah.
I got it. If NFC wins, the average return is 10.8%. And if the AFC wins, the average return is 7.1% for the following year. How about that?
Woo!
So it's not much difference in either of them.
Well, the NFC won, so we get an extra 3%. It's like Groundhog's Day, but for traders.
Meanwhile, the average for the last 150 years is about 7%. So let's see. You rock haven't seen space. Hey, space is finally doing a little something, right? Back from the dead, up 26% today. Wow. Well, let's take a look, guys, and see where we are. How many people have stayed with this space? I have some people in my room that are long space at like $30.
Yeah, you say it's up 26%, but it's only up to $10. I'm looking at
I know. It's down from $57. But, I mean, look, if you're in it, take what you can get. We're coming to a very big level, right? So, guys, I have a weekly chart up, right? And you can see how bad a downtrend this has been for a year. So, 1079 is our weekly resistance, and then 1290. If it's up to me, I'd probably be a better short seller at 1079. But, again, we don't short $10 stocks. But, if you're in this thing, above 1080 is the first spot where you can start showing a little, yay, this might do something. What else we got, guys? DWAC. Today, guys, just to let you guys know what we've been doing. We've been focusing on the video today. I think our buddy Jim Cramer came out this morning and said that he really liked the stock. Got a big initial pop, and then we went down from there. We have just passed some daily and weekly levels. Actually, we're sitting right on a spot right now. The daily spot in the video of about 262, right? Cleared the weekly a little bit ago at about the same thing. We're at a giant level right now in NVIDIA, 262. Earnings are coming out tomorrow. So,
Oh man, I had long calls on Nvidia that I sold yesterday. I sold them one day too early.
yeah, what are we up now? 15 points today? Yeah, 20 points were up today. What made you get out of them yesterday?
I don't know. That's a good question.
Look, it's always easy to look back in any trade that we do and say woulda, coulda, shoulda, right?
Yeah, I did the same thing with Asana. I had calls on Asana and sold them, and they were like long. I think I had the March 18th. Yeah, if you go out to a daily, I think I had like the March 18th, like $60 strikes or something when the stock was at 45, and I sold them at, and then I was looking at the chart and I was doing the math. I was like, man, these contracts would be worth, $1,000 a piece now and whatever.
That's right.
It's always woulda, shoulda, coulda.
It is, but here's the thing. And this is what I tell all my traders, even if you're day trading, right? There's no reason to ever sell any position that you have, all of it, when it's going in your direction. And I understand options are different. You have an expiration date, right? So I understand that. But if something's going in your direction, the first thing I always tell everybody is let's cut, especially an option, cover the cost of the option, right? And then just let it go. And you can always keep, options trade like stocks. You can trail your options and stay in them. But anytime you're in something that's going in your direction, and here's a big mistake a lot of traders make, is getting out too early.
Yeah.
Just keep raising your stop orders to lock in those profits, right? And hang out and go. We get out of our losers very quickly, and what we have a tendency to do as traders is also get out of our winners very quickly, and you shouldn't. It's got to be the exact opposite. Dump the losers and let the winners ride.
Well, my problem is, like, say I buy a contract for $100, and then within like 2 hours it's down. If I'm buying like some short weeklies or something, or the next day it's down 20% and it's only worth $80 or $70, yeah. I'll sell it because I'm like, I don't want to lose all that. I can save, $70-$80 by selling it now. And the next day, the move I was looking for ends up happening, and I'm like, oh, geez, like, why'd I sell them? So I think I actually sold the NVIDIA calls yesterday for a small loss, and then now they'd be, well, I can see right now what they'd be worth.
Yeah, a lot. But here's the gig: when you get into any trade that you do, right? To me, if I'm getting to a trade and I buy something at $1, whatever it is, I'm going to let that go. I'll lose half of that. Otherwise, you're not giving yourself enough time to make the trade work. That's the bottom line.
So that's your threshold, a half. See, that's where I need to just be able to.
$1, all right, I'll risk 50 cents on the trade. If I'm wrong for 50 cents, chances are I'm probably wrong.
Yeah, you need the fortitude to be able to watch it go down a little bit and still think, okay, my thesis could work out here, that the trade's still on, even if it goes down a little bit. So I'll keep that in mind. Next time, I'll give it a little bit more time.
Look, the best trader in the world is not picking the top or a bottom in any stock that they ever trade. It's just not happening. You know what I'm saying?
Yeah.
It's not happening. And, NVIDIA had a catalyst. Look, again, like you said, it's easy to look back now. NVIDIA's up $20 today. Okay. But it did have a catalyst with its earnings coming out in a couple of days, and the stock was beat up. And what you did was good, but you just got to give yourself a little chance in any trade that you do.
What about someone was asking about this stock earlier, Blackstone BX, because this is one that doesn't look like it. It's like it doesn't look like it knows what it wants to do.
BX, let's take a look. Not something that I'm familiar with, not something that I ever traded. First thing I ever do, guys, is I always go to a daily chart. And first thing I want to check for everybody out there is the average daily volume, right? Because we're never going to trade any stocks that don't trade at least 1 million shares in volume. This is fine. It trades up 8 million shares a day. This chart's just a mess right now. Let me see where we are in a 5-minute. 125.47. All right.
Yeah, so I'm saying it doesn't look like it knows what it wants. I mean, there's no trend to speak of. It's going up and down.
Yeah, no, it's in the middle of nowhere's land. It probably don't even get a catalyst in this until earnings come out again, right?
Yeah.
It's just sitting right in the middle of everything. If you have a long-term thesis, that's a different conversation. But trading-wise, I don't see anything to do in it whatsoever.
Yeah.
0.0.
It's basically what I said when someone asked earlier. It doesn't know what it wants to do.
Yeah, I mean, AMD, I kind of am leaning towards short in AMD. We made a nice trade in this. Check this out this morning. And the video was doing the same thing. And we had to cheat to get in this trade, but a bunch of people did. AMD went from 118 to 114, and he was our support level. For those of you who are watching that don't know, everything that we do here, day trading, is based on technical analysis. And we use our moving averages and our pivot points to help us find places where we might want to get into trades. And AMD was something we were watching very closely this morning. The stock went down $4 and just about hit our support level. Absolute bottom. The stock went straight up from there. So this is what we're looking for as day traders. I love trading AMD. I love trading NVIDIA. They're very volatile. They give us a lot of opportunities during the day. So those are a couple of the stocks that we really count. And AMD is really a mini NVIDIA, right? They kind of will have the same chart, although NVIDIA has been much stronger than AMD today. But they kind of just have a strong stock. But those are two stocks we concentrate on day trading because they're very volatile. Safkan DG said the best traders are not catching tops or bottoms. Yeah, absolutely. I would rather be in trends all day long. I mean, look at NVIDIA today, guys and girls, right? Look, this is the definition of a trend trade, okay? It just keeps making higher highs. It consolidates a little bit. Here, it pulled back to our trend line at 1025 at 255 bucks. This is what we call a trend trade. It never really penetrated our 9 EMA. And from 255, you could still be in this stock at 262. So this is what we're talking about, Aaron, about not getting out of your trades too soon, right? If we get into this for a technical reason on our 9 EMA at 255, there is no reason to sell this stock until it breaks the trend line. So this is a 7-point trade that you can still be in, and there's no reason. We got into it here technically because we like the trend. There's no reason to get out of it until it breaks this trend line. So this is a $7 trade that you're in, and it looks like it's going higher. We just broke daily and weekly levels in this. But these are the opportunities we look for that we can just sit and hang out and watch it go in our favor.
Yeah, and just to note, NVIDIA does have a earnings report tomorrow. Mm-hmm. They're expected to be good, but the bar's already set pretty high because AMD reported some great numbers.
That's right.
But NVIDIA always crushes it.
Yeah, but it's up 8% today, right? So how much of this is going to be in the market already, in the stock already? You don't know.
I don't know.
I think the expected move in AMD, let's take a look. I'll show you guys how to do this too, guys. This is on Thinkorswim. I don't know how many of you guys have Thinkorswim out there, but on Thinkorswim, we go to our main page where it says trade and just type in the stock. And in gold, it's going to tell you what the expected move in the stock is. That means NVIDIA, based on the earnings that have been coming out for years and years and years, is expected to move about $21 tomorrow. Now, you don't just put orders out up or down $21 and expect it to get there and you make money on it, right? The expected move, I think, in Netflix when the earnings came out was $30 and it went down $120. Okay. So this just gives us a little sense as to about how much the stock should move when the earnings come out. I think we have UPST tonight also.
Oh, that one's going to move for sure.
$22, right? And now this stock is down to like $100, right? What is it?
Yeah, so it's a 20, it's 106 right now. So it's going to be a 20.
Right? They're expecting maybe a 20% move in this stock.
Compare that to NVIDIA's, it's $20, but it's a $260 stock. So it's like less than 10%.
Exactly right.
But I wouldn't be surprised. I mean, so right now NVIDIA's at 260. I mean, I wouldn't be surprised if the stock's above $300 tomorrow. I wouldn't be surprised if it's at 210. You know, who knows with NVIDIA? But usually the company crushes it on earnings, and it's a strong company. People love it.
Yeah, we can look at some of the earnings just to give you guys an idea of what we're looking at, right? Roblex is another one we're going to be looking at tonight. It has an expected move of $14. This stock has been pounded down from its recent highs. So these are the three stocks. So we'll be staying late tonight to watch these earnings, and hopefully we'll get some trades out of it.
Yeah. I think Upstart's interesting. The problem with it is the contracts are so expensive at this point because it's
Let's take a look. Yeah, because there's a lot of volatility expected, right?
Yeah.
So the expected move right now, what we say, $20. All right, so let's go to the options. Where are my options? Why don't I have my options up here? There it is. Okay. Well, let's take a look at our options change in UPST. So we're expecting a $20 move from 105. So what's that? 85 and 125. Let's just take a look. So 85 puts are $3.20, and 125 calls are $4.95. So right away, this tells us more people are leaning towards a bullish.
Bless you.
A bullish scenario, right? The options are almost $2 more to the upside. So what I usually do is I want even a more move than that. I'll look for like a 30-point move, right? So if we get down to like 7, and I think UPST, if I'm not mistaken, was down to this $75 range at one point not too long ago. So yeah, your 20-point moves is costing you $300 or $400 just to get involved in one contract.
That's what I'm saying. It's pricey. It's pricey.
Yeah, see, I thought 75. We got exactly to 75 in this thing. So.
And it got all the way up to what, 390?
Well, 401 was the all-time high.
Holy cow! what a crazy stock.
Mike Alsum, join his room. He's the best. So what I'll do in this is I'll put some orders in up 20 or down 20, and then we'll look to trade it off the earnings later on tonight. And the way we'll trade it is just by looking for any of our regular setups. You know, if we get a far from moving average trade, a trend trade, a regular moving average, blah, 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 all that stuff. And we'll do that in Roblex, we'll do it in NVIDIA, and we'll do it in UPST. Roblex, the expected move is $14. Correct. So we're pretty quiet right now. Again, NVIDIA, I mean, this thing is just insane, right? It's not insane. It's a trend that's going nowhere but up. Guys, you got any trades in the room? UPST is a short. I like that. 3 of the last 4 earnings, UPST has went far past the move. There you go. Okay. AMD, I would not short up here now, guys. It's taken way too long to get up here. It is not a trade. Vertical spreads can cut costs and define. Absolutely, Q. I have some people in my room that are really good at options. I'm being honest with everybody. It's not my forte. I know enough about it to get myself in trouble, but I am certainly not an expert in any way, shape, or form. But we have some people in my room who will do the spreads and iron condors and all that other stuff that can cut your risk and stuff. Airbnb
all that jazz.
Yeah, all that jazz. It's just not, it's not my gig. I'm trying to look at some other stocks for you guys. Hold on. Facebook, sell short, VWAP. Facebook has been horrible, right?
Yeah, I mean, everything in tech and everything's up today, and Facebook's down or flat. So that should tell you all you need to know, right?
Yeah, exactly. So, look, in a down market, I'm going to be looking to short Facebook on a rally, right? We were as low as 216. What are you guys looking for? 218.20, 219.20. All right, let's do Facebook. If we spike up to 218.20, a little shortsky-wartsky. Wow. I like shorting stocks that are very weak in a strong market, because what's going to happen is anytime that the market turns a little bit, these are going to go back down. So let's go 218.25. We'll short a little. Is that on me or you, Aaron? I hear somebody talking. Rock John Market. Oh, it's mine? Hold on. Rock John mute. Yeah, it was somebody in my room. Okay, so we got a little order out to short a little Facebook, canceling Netflix, NVIDIA buy. We ain't getting that. So the reason why I don't mind shorting Facebook is if the market, when and if it does turn, Facebook should turn with the market.
What about Tesla? Let's check it on Tesla's chart.
Yeah, let's check it out.
Also, Marriott's chart is just insanely strong.
They had earnings today, right? Marriott, I believe.
Up 5%?
I think so. Yeah, let's look at Tesla's daily, because this thing's been all over the place too, right? Well, if we look at the daily chart, twice in the last 3 days, we've tested this 860 level. We bounced nicely the first time. We bounced nicely the second time. So next real resistance we have in Tesla is 946 and 968. And Tesla's going to trade with the market. If the market keeps going up, Tesla's going to go up. But it's interesting that it held this level twice down here. So, that's your line in the sand. Just call it 859, 860. Tesla's just going to trade with the market. I guess Kathy Wood's having a decent day again today, huh?
Yeah, I wonder how ARKK and ARKW are doing. Oh, wow. ARKK is making new highs of the day.
There you go. 73.40. It's only down about 40% from its highs now, right? So again, here's your daily chart of ARK. For this to be positive to me, it's got to get above like $78. Look how bad this trend has been. I mean, this is a weekly chart.
Yeah.
It's horrendous.
Not great.
No, you're trying to pick a bottom in this thing, and it's going to bounce when the Teslas and the coins and everything else that she's involved in are bouncing, but I don't know. To each his own. What's going on in Facebook, guys? All right, now here, this is a good lesson for everybody, right? I'm going to cancel Facebook now because it's just taking too long to get there. Anytime we want to do one of our day trades, we want something to move fast. The faster it gets to one of our levels, the better the chance will be that it'll stop going up and go back down from there. When something just takes forever in any trade, we're not going to do it. AMD 119.40. Let's take a peek. What's 119.40 in AMD? Mr. Wonderful on Shark Tank said Facebook hit its bottom. Oh, good for Mr. Wonderful. I think he should team up with Jim Cramer and they should start a new show. What do you think of that, guys?
Yeah.
Aaron, did you see somebody posted something about Jim Cramer's picks for the last, I don't know, 6 months or a year? And they had a whole chart laid out of it. And I guess the bottom line is, everybody, that Jim Cramer is for entertainment purposes only.
I did see one list, and I thought it was kind of misleading because it was a chart like you're mentioning. And it was literally like 100 stocks that were in the red. And it was like he recommends so many stocks that some of them have to be green. So to me, I was like, I'd rather see a full comprehensive list of every stock.
I think this is it here. unusualwhales.com/ETFs. If anybody's interested.
Okay.
I don't really care.
No, look, I know. They went out and did essentially like a reverse ETF of all the stocks that
correct.
Cramer, yeah.
And I think that was better than the ones that he's picked. AMD 120.10 lines up for daily and weekly. Let's take a look. So now we're looking at AMD, guys and girls. The stock is up from $114. Stretching out here a little bit. We're about $1 above the moving average now. We're going to go right to the daily chart. And here we go. So someone in my room just pointed it out. We got some nice daily resistance coming up at about 120.10 and 121. So the reason that I would love that short is because we're getting stretched out here. So if we get to 120, 121, we're going to be aggressively short AMD for a trade anyway. For a trade. This is a good one that just posted. I am relatively new and started losing, but I believe most successful guys in the business starting losing. Am I a fool to think so? Yes and no. Most people, look, the most important thing about trading, and I don't care where you get it from, okay? You have to get some kind of education. Benzinga has fantastic programs for that. You have to get some kind of education. If you come in and try to do this cold, I don't think you'll ever, honestly, I don't think you'll ever be able to figure it out. Read books, read up on technical analysis, keep your trading very small at the beginning so it doesn't cost you a lot to learn, right? I think that's one of the most important things. People come into this thinking that it's going to be a get-rich-quick scheme, and that couldn't be further from the truth, right? Get in a good group, get really good mentorship. I always offer you guys 5 days in my room, greenroom-live.com. Come hang out in my room for 5 days with us. Doesn't cost anything. I guarantee you in that 5 days, you'll learn more than you will anywhere else in 5 months. But at the beginning, keep things small. And money management is the most important thing. Money management. Can you show how to add the patterns you have on your charts on Thinkorswim? Stu, I can share that with you if you come on into the room and visit with us. I'll give you all the technical analysis. I mean, I'll tell everybody what we use. It's no secret, okay? We have 5 EMAs, a 9, a 15, a 30, a 65, and a 200. Those are our EMAs, 5 of them. And then we have pivot points, which are these dotted lines, and we have relative strength. That's it. Try to keep it simple if we can. Boeing, guys, what are we looking at Boeing? I have about 75 people in my private trading room. I try to keep it around that. We don't want to have a lot more than that because then it becomes self-defeating. Everyone in my room works together. It's just a family. It's a beautiful thing. I love it, love it, love it, love it, love it. Andreas, send me an email to come into the room for a week first, and then we can talk about rooms and stuff like that.
What up, David? How we doing?
What up, Spence? How are you?
What up?
How was your Valentine's Day as a newlywed? Oh, you're not married yet, right?
Was that yesterday?
Yes, it was yesterday.
I made my CV, my late days CVS run, as did every single other guy in this office.
And they still had stuff left for you?
Yes. Yes, somehow, some way.
That is funny as crap. Oh, I love it. This is the stupidest holiday in the world. No?
I couldn't agree more.
All right, here it is, guys. This is it. Pro Kramer, minus 11%. Short Kramer, up 2%. Pelosi, 26%. There you go. Pelosi wins over Kramer. So you're better off following Nancy Pelosi than you are Jim Cramer, according to the stats.
Someone in our chat asked what's going on with space. They are taking reservations starting tomorrow. So
Yes,
I gotta
there
say,
you go.
I think the stock is still going to be, if not a zero, darn close to a zero, eventually. But
Why do you say that, Spence?
because who's going to pay $450,000 to go to space for a minute or 2 minutes?
Is that what it is?
Yeah.
Yeah.
Wait, you go.
I happen to agree with you. I just wanted to know what your thesis.
You pay that much money to go up for like 5 minutes?
I'll tell you how much it costs. It requires a $150,000 down payment, and then the total cost is I think it was in the PR this morning. Yeah, $450,000 is the total cost for a space flight,
Yeah,
and it's a couple of minutes.
How many billionaires are there in the world? I have no idea, but
Probably
I'm just
about
saying.
1,000.
They say it's a 90-minute journey, but that includes the way up and the way down. How much time are you actually in space for? I think it's like I think it might be actually like 5 or 10 minutes. I'm not even joking. So,
What else?
whatever.
You know,
The stock is whatever. The stock is, when you get these stocks down 80, 90%, they can rip in your face.
No question about it.
That's what's happening here. So
No doubt about it. Earnings are coming out also in a week. They won't have any. So
they don't have revenue.
Right?
Forget earnings, David. They don't even have revenue.
I know. It has nothing to do with earnings. So if I'm looking at this, you know what the thing is, Spence, from a trader, you can't short this stock, right?
Difficult.
It's not. You don't want to short it because, God forbid, it turns into a meme stock again.
I know.
It goes back to $30. That could happen at any time, right? So, well, some people are in it much higher, are getting the chance to get bailed out. How about that? That's about the best I can say about that. Although some people that have come to me are in it at 30, 40, 40, 30, and $20.
What about Apple?
Right? Hold on with this. Dave, you're going to have room for me in March. I paid off my daughter's wedding and house, looking to sell finally. Oh, there you go. Good, Voodoo. What I would do is pay off your daughter's wedding, pay off your house, and put it all into NVIDIA options. If I were you. That's just me. Guys, what's the level in AMD?
Wow, NVIDIA is still going up, by the way.
Yep. NVIDIA broke all levels on a daily and weekly chart.
Well, no, just as I said that, it's coming down. Oh.
Yeah, but it's not really. I mean, this is just a spectacular trend trade all day. Just beautiful, beautiful, beautiful. No, you can't short $10 stocks. That's the bottom line. 120.10 in AMD and then 121, right? We got a couple of levels. Yes. All right. Let's put out 120.10 in AMD for a little short ski. This thing was like death this morning, AMD. I think it's now just being dragged up by the video right now. Going to be a point. You got to think at some point too, guys. Today. Oh, no. The video earnings aren't until tomorrow. So they can run this the rest of the day. Yeah. But at some point, they're going to take some profits before the earnings come out. At some point. Could be 10 points higher than here. Who knows? Wow, UPST just broke out to the upside. UPST was a trade that set up for us this morning also, guys and girls. If you look on our charts, when we spiked down to this 104 level, we grabbed a little bit of that stock down at that 104 level. And from there, it went up like $2.
Shout out to Zunaid on live trading for playing NVIDIA calls this morning when the stock was at 248. Bam.
Oh, that's great. Nice job. That's spectacular. UPST, we can look double top, guys. If we get up to for a trade, 111. I like that for a double top. Myrna's finally having a decent day, right?
Hey,
drug stocks.
Hey, David, I have a random question that's a little bit off topic, but you're a former floor guy, right? So right. Maybe you can answer this. What was the ticker yesterday, Aaron? Shit, what was the ticker? There was a stock that was getting taken over in an all cash deal. Nothing out of the
DDGI.
No, it was it may even be
BDSI.
BDSI. Okay, so BDSI yesterday, David. Here's my question for you. BDSI is getting taken over. Okay, whatever. I think the price is $5 or $6. Okay.
BDSI. Okay.
BDSI.
$5.60 a share.
$5.60 is the takeout price. All right. This was announced yesterday. Okay. Now, my question for you is, if you look at it daily and you see the daily volume from yesterday, it was an ungodly amount of shares, right? Traded hands yesterday. I understand who's selling BDSI. Who is buying BDSI yesterday? Is it just computers buying it and selling it to other computers?
This thing traded 60 million shares yesterday.
Who's buying
60 million shares?
Who's buying BDSI? Is it algos playing for a nickel arbitrage? I mean,
you know what, Spence? I have no idea. Your guess is as good as mine.
Okay, I've stumped two people on this question already.
Yeah, I have no idea. What's the takeover price?
Dennis?
I asked Joel. I forgot to ask it. I think the price is 560.
But it was at
what is this thing? I don't even know what it is.
It's a biotech. Who cares? It's a biotech. Whatever.
Right. So I mean, look, it had to be. I would think it has to be all new investors in the stock. It has to be, right?
Who?
I don't know who, but it's got to be all new investors in the stock. I mean, I can't imagine all retail people going in and buying 60 million shares of this stock because it got taken over at $5.50. You know what? The bottom line is I'm not going to try. You stumped me. I have no fucking idea. Pardon my language.
I got him. Good. All right. I'm over 2.
Unless it's an arbitrage situation.
Well, for a nickel though, I mean, I guess you do that 1,000 times a day, you end up with a decent amount of money. But I don't know.
I mean, if it's an all cash deal and you know the exact price, I guess you can do that.
Right. There is no arbitrage. Well, there is, I guess, but it's a cash deal. It's not as if it's a stock deal.
Yeah, I have no idea. You got me.
All right, whatever. Hey, you learn.
I guess that's above my pay grade. I have no idea.
Okay, that was fun. Anyway, David Green joins us every single Tuesday to spend a half hour with us, and Jay Rice is saying maybe people guessing there's going to be another bid, but all right, whatever.
That ain't going to happen in a million years. They're lucky they got $5, would be my guess.
Anyway, all right, David, it's always
have me again.
What?
Anyone? Thanks for having me again. Anyone who wants to come visit, just go to my email, dgreen927@yahoo.com.
We'll put it in the chat.
That's all I got.
I'm putting it in the chat right now, everyone. dgreen at, was it at Gmail? Sorry.
Yahoo.
I knew that. Yahoo.
AMC. Right. Yeah, that's. I don't even want to. Let's not talk about AMC. All right, guys. Thank you guys for having me.
Thanks a lot, David.
My pleasure.
All right. Okay, what I want to do next is we got a lot of guests today, Aaron. We got a jam-packed show. I want to go into the main topic of the day, which is Warren Buffett's portfolio. All right, what we're going to do is I'm going to show you how to find out what is in Buffett's portfolio in Benzinga Pro. We're going to go over what he bought and what he sold last quarter. So, are we ready for that? And then after we do that, we as I said, we got a ton of guests today. We're going to have a lot of new guys, actually. We're going to have, at 12:15, Laureen Gilbert. She is the founder and CEO of WealthWise Financial Services. She's going to comment on the market. We're going to have Josh Snow on at 12:30. He's the founder and CEO of a company called Snow Oral Care, but he's also a mentor on the Going Public show. We were talking last week, Aaron, about direct-to-consumer businesses, right? You were talking about Warby Parker. He builds a direct-to-consumer business. So we're going to ask Josh what makes or doesn't make a good direct-to-consumer business. That'll be at 12:30. We're going to have Robert Roy on TradeWithRob.com at 12:45. James A. Doris from Viking Energy at 1:15. And Nick Hughes-Jones, the Chief Commercial Officer of Mawson Infrastructure, crypto miner, at 1:45 today. So a lot going on. Do us a solid. Smash that like button. What? Why is George out of the frame here?
George.
Let's get George on the frame. And we got a lot going on. So smash that like button and let's get started. Let me share my screen with y'all. And I'm going to show you how to find Warren Buffett's portfolio in Benzinga Pro. So here it is right now. I've already got it pulled up, but I'm going to actually start from scratch. All right. So Warren Buffett, to recap, the most influential investor in the world, basically runs a hedge fund. I mean, it's not a hedge fund, but it functions like a hedge fund, more or less. Has his company, Berkshire Hathaway. They own hundreds of companies in their portfolio, and within that larger umbrella, there's both private companies that they own the entirety of, and there's also a number of public companies that they own a piece of. And every single quarter, Warren Buffett and his team are tweaking the stocks that they own, right? They're buying things, they're selling things. They're required to disclose their changes to their portfolio every single quarter, because there is a rule that says if you manage more than $100 million, you must disclose to the SEC. It's called a 13F filing. You must disclose a 13F filing every single quarter. What did you buy? What did you sell? Now, there are limits to this transparency. You do not have to disclose your options trades. You do not have to disclose like derivatives, like swaps or whatever, but you do have to disclose what stocks you own. That's it. What stocks do you own?
I think you do have to disclose options trades to a certain, if they're above a certain.
They may have just added that, but that was a big criticism of Bill Wang. He was like leveraged like up to his eyeballs in swaps, and he didn't have to.
At least Michael Burry's 13F filings, it has like calls and puts.
Does it?
I don't know if he's voluntarily disclosing that or if
no. I don't. Is that in the 13F? That might be in like in what is it? 13D. Different filing. When if you are a 10% shareholder or more in a stock, you have to disclose all your trades in that. That could be what you're referring to. But anyway, Warren Buffett's portfolio. Okay, so the 13F deadline is 45 days from the end of the quarter. That deadline was yesterday because the quarter ended, December 31st, and it's been 45 days since then. So he filed with the SEC yesterday. This is what I've got. This is what I've got in my portfolio as of the end of the year. Here's how you find it. You go to Benzinga Pro. I'm on my homepage right now. You go to the details widget. It brings you to Apple by default because it's the largest stock in the universe. And then you just search Berkshire Hathaway. Now we have a few different things here. There's Berkshire Hathaway, the stock. There's two stocks, right? There's the Class A and the Class B. But skip the stock. Go to the one on the bottom where it says fund. Berkshire Hathaway, it says it's a fund. Let's go to that guy right there. Boom. Here we go. Let me format these columns so it's easier to see. We can get rid of class because we don't really care about that for purposes of this exercise. And position and value. All right. These are the stocks in Warren Buffett's portfolio. Let's talk about it. And we're going to go in order of the largest position to the smaller. We're not going to go over every single thing, but here we go. Apple. Aaron, Apple represents, you can see there's actually more than one row for Apple here. It's got 669 million shares there, 61 million shares there, 58 million shares there. Bottom line, Apple represents I think it's 47% of Warren Buffett's portfolio. 47% is just Apple.
Wow.
Other largest holdings, American Express, Bank of America. We know he loves his banks. Kraft Heinz, which I bought after he bought it, and that was not a good decision. He's got a lot of Coke. He's got a lot of Verizon. What else does he have here? American Express. These are his largest holdings in his portfolio. Now, I want to go over what's new, right? Because I mentioned that every quarter they have to disclose what they own. These big hedge fund guys. People just sit around and they keep track and they compare of, what's new? What's new from last quarter? What did he buy? What did he sell? What did he add to? What did he trim? You want to know what Buffett's new companies were at the new stocks he bought last quarter? He bought 3 new stocks last quarter.
Snowflake.
No, he already owned Snowflake.
I don't know.
He got that before the IPO. He bought Activision Blizzard, ATVI. This is actually pretty incredible. We don't actually know when he bought this, but he bought this thing, at most a couple of months before they got taken out by Microsoft. So that's pretty fun that happened. Zen bullish. I'm not an influencer, but I appreciate that. Okay, he bought Activision. You know what else he bought? He bought New Holdings, ticker NU. He bought 100 million shares or 107 million shares of NU. And he also bought, you ready for this? Check this out.
Alibaba.
He bought Flunk. Look.
No, he did not.
He did.
Really?
He bought Flunk. Spencer Israel and Warren Buffett together combined to acquire a little over 2 million shares of Flunk in the last 5 months.
Wow.
I know.
Look at you, Spencer.
I know. I'm front running Warren Buffett now. FWONK. It says it right there. It's right there. So that's fun.
Yeah, there's been a lot of speculation that Warren Buffett actually watches pre-market prep every single morning.
It's true.
We can probably just go ahead and confirm that. We just have to figure out now who he is in the YouTube comments.
Yeah.
He uses an alias.
If you are Warren Buffett, blink twice in the chat. If you're Warren Buffett right now. Okay, so those are his new positions. He sold out of 2 stocks. He sold out of Teva Pharmaceuticals, TEVA, and Sirius, SIRI. And he added and reduced his stakes in a bunch of stocks. So I'm going to run through these quickly. He added to his stake in, actually, I'm just going to pull up charts so you can see the Buffett effect here. He added to his stake in Chevron. Let's pull up a chart. Okay, you can actually see it. See that after hours run up last night? That was Warren Buffett. He added to his stake in.
Wait, he bought Chevron last night?
No, last quarter. But the filing hit last night, and such is the power of Warren Buffett. He can move a stock just by buying it last quarter. FND, Floor and Decor. He also bought that stock last quarter. You can see it opened higher today, up 2%. That is why. He also bought Restoration Hardware last quarter, R8. These are stocks that he already owned. He's just bought a little more of. You can see our RH up 4.25% today. What stocks does he still own, but that he reduced last quarter? He reduced his stake in a bunch of pharma stocks. Bristol Myers Squibb, BMY. You can see that candle last night after hours actually closed green, but when the filing first hit, you can see it trade down there. So it is up today, 1%, but he lowered his stake in BMY. He sold a lot of shares. He had 22 million shares. Now he only has 5 million shares. He sold his stake in AbbVie, ABBV. He cut his stake from 13 million to 8.5 million. I'm sorry, from 14 million to 3 million. So he sold a lot of his AbbVie. He sold Royalty Pharma, ticker RPRX, last quarter as well. These are all trading higher. That's interesting. He also reduced his stake in Visa, MasterCard, Marsh & McLennan, Kroger, and Charter Communications. Those are the moves that Warren Buffett made last quarter. So just to recap, new positions, Activision Blizzard, kind of irrelevant because they're actually, no, it's not irrelevant because ATVI is still trading well below its takeout price.
Yeah, what is it, 95?
Takeout price on ATVI is 95. Look where the stock is trading right now. It's at $81. All right. So
it's almost a 20% move.
Yeah. So Warren Buffett bought Activision. Warren Buffett bought New Holdings, ticker NU. Let's pull up that chart. Look, it's up 4% today. Boom. And he bought Flonk, FWONK, which, I myself also acquired last week. And he sold Teva and Sirius, SIRI, entirely. And that is what Warren Buffett did last quarter. But again, you can find his portfolio in Benzinga Pro. Just go to the details widget and search for Berkshire Hathaway. Berkshire Hathaway. And there it is. Just like that. All the stocks he owns. Sort by how many shares, sort by the value in his fund or the portfolio, the whole thing, see what his largest positions are. There you go. It's very easy to do. And most major investors are not, whoa. See, this is how I know it's not Warren Buffett. Because his name is spelled wrong.
Yep. 2 T's on the last name.
This is actually a...
2 T's.
This might be Jason Raznick's #1 pet peeve in the whole world. And I did this once. I spelt Warren Buffett's name wrong, and he was extremely disappointed in me. So
I've done that before too.
Yeah, this might be his biggest pet peeve in the whole world, spelling Warren Buffett's name with either one F or one T. It's 2 F's, 2 T's. But anyway, as I was saying, he's kind of the only investor out there that has the power to move a stock just with his 13F, though you're going to see a lot of headlines today because all the 13Fs are out. So we can look at Melvin Capital, we can look at Bill Ackman, we can look at all the big hedge fund guys, right? Dan Loeb, Leon Cooperman, Carl Icahn, George Soros, all these big time investors. Their filings are out. We can cover that later. But what I want to do right now is bring on our second guest of the day, Laureen Gilbert. As I mentioned before, she is the founder and CEO of WealthWise Financial Services. I want Laureen's thoughts on the market right now. So let's give her a special intro and bring her on the show. Laureen Gilbert, welcome to Benzinga Live. How are we doing today?
Thank you. Good to be here.
Let me just start a high level here. What is your sense of things right now? It seems like for the past couple of days or even week or so, there is this, like, I've been calling it this like vacuum of unknowns between the Fed and what's happening, over in Ukraine, and everything is kind of just dependent on whichever way the wind blows there. But what is your sense on where the market's at?
Well, I think there's a lot of nervousness right now with the uncertainty of both a geopolitical risk as well as what we know about the Fed raising rates, shrinking the balance sheet. And yet, when I look at geopolitical risks of the past and what's actually happened in the markets, it tends to have some volatility in the markets around a 5% drawdown. But in an all-out war situation, we usually end up with double-digit returns. So we're all hoping for there not to be a war, and we saw that there was a withdrawal of troops on the border. That's all good news, and I think that the markets will start to calm down as well. We saw oil drop today significantly, so we're on the right path.
So I would love to just know, Laureen, because you're a wealth manager. You're talking to clients every single day. Presumably high net worth individuals. I'm curious to see or get from you what is their sentiment or tone right now as far as amount of fear.
Well, it's usually our same clients that we always know, our nervous Nellies that are going to give us a call or send us an email. And so we're very prepared for that. I know who those clients are that tend to stay close to the news and tend to worry. So it's really keeping them, taking their emotions out of investing, helping them see a longer term horizon. And our expectations for the year are still quite positive for a year end market to be higher than we began the year. So it's really keeping that focus on the end game instead of the volatility right now, and yet addressing that both with clients as well as in our portfolios and becoming a little bit more defensive in our portfolios right now.
Okay, I'll get to that defensive comment in a second, but I think Aaron and I could probably also learn a trick or two here. So you have clients that are nervous Nellies that will email you at the drop of a hat. Oh, we're down 2%. This guy is falling. We also get those emails, not from clients, but from readers, viewers, listeners, etc. What do you say to that every time?
Well, it depends on the person, right? And so part of it is, we have one client who's going to need money sooner than later out of their portfolio. And so it's a matter of addressing that and saying, where are we going to get that $1 million that you need when you need it? So some of it is driven by their need for cash. Others, it's more just a nervousness about the markets. For some, it's they don't want to see the highs of the market and then their portfolio go down, which frankly is unrealistic. We have to, if you're going to be in the markets, take the ebb and the flow of the highs and the lows. And over time, your accounts are going to go up over time. So just addressing those concerns with individuals and understanding exactly what is behind their fear.
Now, to your comment you made before about positioning your portfolios to be defensive, what does that mean? How defensive are we talking here? Are we talking like consumer staples and utility stocks, or are we talking like bonds and commodities?
No, more adding in healthcare. We see healthcare a good place to be. People are spending more on their health, and it's also an area that is easily past increasing prices to the consumer. And so that's our theme right now. What areas of the market can inflation and higher prices be passed along to the consumer? And certainly healthcare is one of those places that people are still going to spend money on. So themes like that, we are reducing a little of our beta exposure where we've seen, we see some increased volatility, and we think there'll be areas of opportunity to increase that area later, but maybe decrease it a little bit now and then increase it later. So not huge swings, being very tactical on the fixed income side, recognizing a rising rate environment. So those are some of our thoughts.
Speaking of rising rates, do you have a take on where you think the dust will settle? Not so much, will they, but how many will they, or how much will they raise, and by when? I think the Fed Fund Futures is pricing in. I haven't checked since yesterday, so that was like 10 years ago. But I think last I checked, it was 50 basis points by June, I think.
Yeah, and I think the market is prepared for 7 rate hikes this year. That's what I've seen as far as being priced into the markets. The bigger question is on the front end on that first rate increase. Is it going to be 25 basis or 50? And I think there is that nervousness in the markets that it might be 50, that it might be a stronger reaction at the front end. And I think if that happens, there's going to be some volatility around that announcement, and then the market's kind of settling into it.
Is there any specific areas that you would avoid right now? You said you are trimming some beta. Are there any specific areas of the market that you would just stay away from?
Well, I think, it's all about profitability. The companies that have been not really showing profitability are the ones that have been greatest hit. And so I think for us, the focus is on profitability, true earnings growth. And while we're seeing those profit margins coming down for companies, they're still quite healthy at about 12%.
Earnings have been pretty good. By and large, but
we're tracking 30% year over year earnings growth.
I just, in the short term, I don't know how much that matters, though. It may not. So seven rate hikes, though. Correct me if I'm wrong. My interpretation of the 7 rate hike prediction was that it means 7.25 point hikes. So in that sense, like a half point hike would count as 2 in one. Is that right?
Exactly.
Okay.
Exactly.
Okay. So wait, I'm sorry. Where does that leave us by year end in terms of the actual Fed funds rate? Like 1.5%, 2%?
I think a little over 2.
Whew, we're a long ways away from that, Loreen.
Right.
All right. Well, I guess we have markets saying yes, definite rate hike in March, and we'll see what happens. We'll see what happens from there. Laureen Gilbert, founder and CEO of WealthWise Financial Services. Thanks for coming on Benzinga Live today, Loreen.
Thank you so much. Have a great day.
All right. Hey, I love having new guests on. We don't have enough new guests on this show. If you have a guest suggestion for us, email us. I'll put it up on the screen. Where's the email? shows@benzinga.com. You have a guest suggestion. That email goes to me. It goes to that guy. It goes to our entire show's team here. Put guest suggestion in the subject so we know what you're talking about, please, because we get a lot of emails. 7 rate hikes. I don't know if the market can take that, honestly.
I think, like Loreen said, I think a lot of it's priced in at this point. I don't know if you saw Goldman Sachs lowered its S&P year-end forecast yesterday, over the weekend at some point. And I mean, my theory on it is get all of those headlines, rate hikes
out of the way.
Yeah, get them all out there now.
Well, Bullard, that's what Bullard said. He said to front load it. He was like, just do it all now.
Yeah. Hell yeah.
Okay.
And then it allows us down the road to say okay, we're actually outperforming these conservative expectations we set, or we were pricing in 7 rate hikes. Now we're only getting 6, and then everything's up 10%. I mean, I think, give us all Give us a worst case scenario now,
Yeah.
and let us deal with it when it comes.
I don't know. All right. Made in India. Stop asking for my phone number, man. I'm not going to give you my phone number. Why would I do that? Call you want to call the Benzinga office. Our number is on our website. Zen Bullish. That's great, but can you put that? Can you? All right, fine. Tom Lee is good. We'll reach out to Tom Lee. JC Peretz. We can get JC Peretz on the show. No problem. But also, I'm not going to remember any of this stuff, so please email us because I'm going to forget. By the end of this show, I'm going to forget who you guys just mentioned. So, if you want to come on, our show, email us. Say, hey, I want to come on your show. We love having people that watch. We love having you guys. Well, do we love it? We love it. Yeah. Yes, we do. Debbie Downer.
I'm kidding.
Okay, Warren Buffett. That might be tough, Toffee, but we can try. That would be great though. Okay, real fast. We have our next guest here.
Warren Buffett's granddaughter.
Wait, whatever happened with that? Did you ever follow up with her?
No.
Did I?
I said I didn't. I wasn't interested in it.
Oh, I said I wasn't. So yeah, we got a PR.
She seemed like a grifter.
What? We had a PR email from someone representing Warren Buffett's granddaughter because she's super into NFTs. So I said, yeah, we'd love to have her on. He was like, nah, I don't want to have her on. So I'm pretty sure I responded and I never heard back. I'll follow up with her today. Anyway, wait, as I was saying though, we have our next guest here, but before I bring him on, I want to do a real fast crypto update today. So let's do that right now.
Crypto update.
All right, where's my heat map?
Crypto update.
Check it
brought
out.
to you by Spencer's Heat Map.
Look at the heat map, everyone. It's green across the board. You'll love to see that.
Jesse Steen. I don't know who that is.
Yo, for real, email us. We're not going to remember any of these guest suggestions. Back to the heat map, brought to you by Voyager. You'll love to see this. Although Doge is lagging, only up 1%. ETH is up 5.5% today. By the way, this is the part where I'll plug the fact that we have a number of people from our team at ETHCon or ETH Denver right now. If you're in Denver or in the Denver area, check out ETH Denver and come network with the Benzinga crew. I know they're tweeting from there all week, Logan and Ryan. And Mitch will be there as well, Thursday and Friday, I think. So check it out. ETH having a great day. Solana having a great day. You love to see that. Avalanche having a great day, up almost 10%. Our old friend Near Protocol having a great day. You love to see green on the screen. And this is the part where I say, hey, if you want free Bitcoin, just download the Voyager app. Use this code ZING. Fund your account. Make a trade. And they'll send you $50 in Bitcoin.
$50 free Bitcoin.
$50 free Bitcoin. That's with or without inflation.
Yeah, thank you, Bill. Bill gets it.
Bill gets it?
Yeah.
My chat is lagging hardcore. The comments are not loading as fast as they should, so I'm not seeing chats as quick as the rest of you.
Well, like you mentioned earlier, Spencer, we have a nice segue into our next guest. Yesterday, we were speaking about, was it yesterday? The direct-to-consumer model?
Maybe even Friday.
All right, either way. Within the past couple of shows, we were talking about the direct-to-consumer model. I had mentioned I was officially 100% adding Warby Parker to my watch list.
Okay.
So not my portfolio, but to my watch list. It has made its way into the watch list. We were talking about the direct-to-consumer model, some other companies that have that model in the stock market. Today, our next guest, Josh Snow.
He built a direct-to-consumer.
He built a direct-to-consumer company.
Yeah, so he theoretically should be someone who would know. Maybe he has opinions on Warby Parker, but he would know what makes it a good one and what makes it not good one, right?
Well, and I also...
You would think.
Well, let's go ahead and bring Josh on me because I have a couple of questions.
Can we give Josh a special intro?
Of course.
Okay, special intro incoming. Josh Snow, founder and CEO of Snow Oral Care and a mentor on the show Going Public. Welcome to Benzinga Live.
Thanks for having me, guys. Glad to be here.
So I was reading up. No, actually, you ask your question first. I don't want to like steer your thunder.
Here's what I'm curious about, because I know you can buy Snow Oral products. Well, first of all, let's give your company a proper introduction. Oral, what's it? It's Snow Oral
care.
Snow oral care, right? It's kind of like teeth whitening products.
It's oral
And
care. Yeah, it's what you would expect from the incumbents. Toothpaste. We have a whitening toothpaste, whitening strips. We have our hero product, which is our wire kit, which we've sold well over 1 million units of. And it's premium oral care, direct to consumer. We have 50 million shoppers, millions of fans all around the world, and we've been shipping. We shipped the first 1 million packages ourselves to over 160 countries from Phoenix, Arizona. So we're still based here. I'm in the Snow headquarters today. So we are just at Snow on Instagram, and our new kids care line, which is Frost, just at Frost on Instagram. So kind of bringing the premiumization in terms of ingredients, efficacy, packaging, delivery, and experience to the number one sold retail product in North America, which is toothpaste, and really disrupting and challenging the ideas of that commoditized space.
so my question was, from what I understand, you can purchase, a Snow teeth whitening kit at a place like Best Buy, Target. So how do you describe, like direct to consumer doesn't mean you're 100% direct to consumer, right? You can have some retail partners.
Yeah, I mean, it's changed, right? I think at 24, I've been doing this since I was 13 years old. So I've seen over the last 15, 16 years, Google go through its maturation on pricing with competition on the auction. And so really what we realize today, and the way that I talk about it, even in my Powerhouse Brands community with all of our other 3,000 e-commerce founders that we speak to and teach, is that direct to consumer is a launch strategy. It's not a business model. And it's a great way to challenge a large industry if you have an unfair advantage. Previously, that was the Facebook algorithm, which you've seen over the last year, a bifurcation of direct to consumer brands. There's also a slightly similar or very similar term, DNVB, digitally native a brand, which typically Harry's, kind of the originators, the Warby Parkers that you guys are mentioning. Some of those digitally native you're now seeing have extreme retail presence, even in owned retail presence. And so really direct to consumer, we look at it today as a strong launch model, but it must be supported by a profitable, scalable growth model. And that does include where over 80% of people purchase oral care products still today, which is in grocery and retail, although that's evolved with the pandemic and the adoption of Instacart and GoPuff. And so retail has become hybridized in an accelerated fashion. So we look at retail really as another place for us to carry the product, because people will ultimately buy from who they like and trust. And it is still difficult to get a first-time consumer to convert on your website, where they have to pull out their credit card and kind of go through that process. So we realize in a space like oral care, we want to meet the customer where they're at, where it makes sense for our brand to hang out. And so we've been expanding our retail presence, and it's been extremely successful.
Yeah, and I mean, I think what's interesting you mentioned there is, like, if you're on a website and you're gonna buy a product for the first time, I'm not gonna be incentivized to whip out my credit card for something like toothpaste that's $3, $4, $5, you know. So what's like the number one thing that you found in marketing your toothpaste attracts someone, whether it's like to the packaging, to the product, you know, what's the one thing that you have the most impact on?
So the benefit. So what is the benefit of this product over something else? And consumers have never had more choices in their life, whether it be on a marketplace like Amazon, even Instacart, while they're ordering groceries and they want to throw a toothpaste tube. Oh, let me add a couple toothpaste tubes. There's this element of discovery, and consumers today, if you look at the skincare space, they're buying their toner from one brand, they're buying their moisturizer from another brand, their SPF from another brand. And that's kind of the e-commerce 2.0, 3.0 of personalization and customization, which means that for us, we focus on the whitening benefit. We've always been, from the very beginning, we started as Snow teeth whitening, now Snow oral care, or just Snow online. And that was our piece. Was we realized the first wave was anti-cavity. The second was hypersensitivity. And we felt like the cosmetic piece, especially with Zoom and working from home and the focus on the face and the smile, taking up the majority of the face, we leaned into the cosmetic side of oral care, and we felt like that was an area that we could innovate, value add on the cosmetic side. So with any business that we're looking at, we're thinking about what is that true benefit? What do people actually want? Why are they actually willing to spend a few more bucks? And how well do we deliver on that promise? And that's where you get retention. That's where you get loyalty. So for us, it was toothpaste, number one sold retail product in North America, probably the most competitive, space to go into. How do we stand out? Well, let's innovate in terms of what do the customers actually want? They want whiter teeth, and they don't want to suffer from sensitivity to do it. And they'd rather do it at home, just like they can order groceries at home. So we've really honed in on the at-home professional level whitening products, and then spreading that out across the categories from strips to toothpaste to kits to powder to our kids line. And so kind of bridging that benefit factor, that piece in the middle has been our secret sauce. So every brand has its secret sauce. Ours is whitening. And we've just, we spent close to $100 million in advertising that we are a whitening leader, that you should trust us for that benefit.
So Josh, you have a reputation for being like a growth hacker, right? As you grow these businesses. So as I mentioned, and as it says on the screen, you're a mentor on the Going Public show. You were working with Hammett. We had Tony Drockton on the show. I don't even know, it was 2 weeks ago now or last week. I don't even remember. I think it was 2 weeks ago now. And so you've been working with them. I'm really just curious, what specific things do you point to as you're a direct-to-consumer company, you should be doing X, Y, and Z?
Well, with Hammett specifically, you have a rock star leader in Tony, and you have a phenomenal product that has a strong returning customer rate. And to me, that shows, and also no discounting. So the brand has been adamant since day one around not discounting, which is difficult to do, but they've done so at relative scale. And so we see an opportunity with a brand like Hammett for an ambassador program for scaling the direct-to-consumer sales. They're heavy on retail and wholesale. Direct-to-consumer obviously provides better margins. And because they're not discounting, because they have a roaring built-in customer fan base, turning those customers into nano and micro influencers, ambassadors of the product, and giving them perhaps not discounts on products, but rewards of some sort, tiers of those awards, like an Amazon Prime membership. We see an opportunity there where loyalty retention can be strong, and also an opportunity for Hammett to expand the line for .com exclusives, where they might be able to come out with more small leather goods to increase the repeat purchase rate from those direct-to-consumer customers and strengthen the loyalty of the brand.
Someone in our chat said, "Oh yeah, I see ads for Snow all the time." When I was watching the segment that's playing right now, Josh, one of the things you said was, "Yeah, you guys need to up your social game, right? You guys need to start advertising and posting and building that community." So that seems like something that you learned by doing directly yourself, right?
It's the best. I mean, you ask any business owner and you say, "What's the best source of customer?" Any business, they go word of mouth, referrals, because I don't have to pay anything for it.
Yeah.
They're warmed up, it's great. Well, how do you do that at scale? And with social media and influencer marketing, particularly nano influencers, not just the large macro celebrities, but the influencers that have 1,000 followers. Well, if you get 1,000 of your customers talking about you every month with an average of 1,000 followers, you have 1 million people who have a lot of affinity to those family members and those friends. And so social media is pretty much the only way I know to scale to, in Snow's point, to 50 million shoppers, utilizing that word of mouth referral kind of technology. And it's cheap and sometimes free to do for any online business. But there's kind of this mental roadblock, like a writer's block, of thinking about how do I turn my customers into ambassadors? And sometimes it's as simple as sending an email out to your top customers and asking them, would they post in return for a rewards program or a year free of a rewards program? So social media is just so powerful. It's changed though, because the algorithm no longer favors organic reach, which is why we spend tens of millions of dollars a year on paid amplification. So paid amplification is good if your business is ready to take it to the next level, like a business like Hammett that has the inventory, has great manufacturing, and has a killer product, you want to get that in as many hands as possible. And social media is still one of the best ways to do that.
Josh, when you're looking at a direct-to-consumer business or any consumer packaged good business, whether it's a publicly traded company or whether it's a 6-month-old startup, right? What is your like favorite lever to pull on or push? Like what is your the first thing that you look at in your playbook?
So I'm looking at, there's a leaky bucket analogy, and everybody's tempted. It's just natural, primal to turn on the hose and just, can we get more traffic to the website? Can we get a bigger celebrity? Can we get more press, bigger press? Or we need a new product because our customers are asking for it. But the truth is, people want to buy more of what they're already buying first if it works. And if you have a product that works, the offer is where most businesses are unwilling to focus on. They'd rather focus on sending more traffic. What that means is, for example, in our business, we added buy now, pay later options because we are a premium price brand. We don't discount heavily. So in order to increase accessibility so more people could afford our product, we introduced buy now, pay later programs, which are free to implement, especially on a platform like Shopify. So it broke down the payments, 0 fees, 0 interest to the customer, and it allowed us to gain access and change our offer. So our ads became as little as $12 in free shipping. You can experience the new Magic Whitening Strips by Snow, $12. So you've reduced the barrier. People buy from who they like and trust. They're visiting the Snow website for the first time. Now they see an option for a buy now, pay later program. Okay, I'm going to give this a shot. It's got a guarantee. So the first area I look is, what is the offer that they're making? Is it a high price product that's outside of the premium of the industry? How can you add a buy now, pay later option? Something along those lines. The second piece is, how can we increase the average order value? So we look at a metric called revenue per visitor. So for every person visiting the website, how much money are we making per channel from Facebook, from TikTok? If you're a smaller business, maybe you have one channel, it's Facebook ads. Understanding how do we increase that? And one of the easiest ways to increase that, like we do on the Snow website, is we offer bundles. We offer upsells, cross sales. Would you like fries with that? Would you like a shake with that? Would you like a soda? Would you like to supersize the soda? These things that are ingrained in our normal vernacular that online businesses seem to be afraid to use. But when they do, we see sometimes a 15 to 20% increase on the gross revenue of the business, which allows us to then pull the lever of advertising, because now you have an unfair advantage. You're making more, like Snow makes more than any other oral care provider we've looked at in terms of the first purchase, which gives us the ability to advertise a lot on the front end.
Yeah, Aaron, I think you and I are officially qualified to become the CMOs of Benzinga, and as of in the last 20 minutes.
Yeah, my last question for Josh would just be like on a personal level. Like I saw on Instagram, you have like almost 1 million followers. You know, like how did you grow such a wide social following?
I started sharing.
He's asking for a friend, by the way.
I wanted to follow. I thought about it. I said, wow, what if Steve Jobs was on Instagram posting stories and like on podcasts and vlogging about building Apple? Like that whole idea for me was really exciting. That was the whole idea of why I wanted to be a mentor on the Going Public show. Aside from it being the first of its kind and amazing, and the companies are amazing and everyone's amazing, it was this kind of democratization of information and access. And as an underserved student who grew up in West Phoenix, who kind of took $100 and turned it into what we have today, that means a lot to me. That's very important to me. And so I started sharing the behind the scenes of Snow about 5 years ago. And I changed my name to Josh Snow, and I started sharing that. And it started to create this raw and authentic view of this entrepreneur, this young entrepreneur who is just resilient and sharing the good, the bad. I get in trouble sometimes because I share too much too early, and I'm constantly having to take stuff down. But that's the kind of relationship that I built. And we now have that community with Powerhouse Brands, where now we have over 3,000 e-commerce founders that we talk to. And so I think it starts by being vulnerable. It starts by asking for help, which for me was just simply sharing the story. And now it's created this army, which, I don't know if everybody buys a Snow toothpaste or not, but when I post, I'm looking for a marketing director for one of my brands or whatever it is, that community comes in droves to curate talent for me and all of that. So it's a benefit. And also taking on opportunities, podcasts, no matter how small. Some of my early podcasts have like a few hundred views on them, but I did them as if they had 10,000 views. And so sharing that raw story over and over again in different facets, but also taking the viewers along the journey with me so that it was kind of this build your own adventure, David versus Goliath. And people really want to see the little guy win. They really want the underdog to win because they see themselves more in the underdog than they do in the supreme leader. And so by sharing that, I think it gave this voyeurism to the community that people wanted to follow along. And then I throw in some of my personal stuff in my life, and they see that work-life balance is possible in running a business. And so I think that's kind of amplified over time. And it's brought me, I got to tell you, it's the best investment I've ever made because the deal flow I received from that, the opportunities, the talent, it's definitely one of the unspoken advantages we have with Snow and any of my brands is the ability to attract that level of talent.
You tell me people don't root for Procter & Gamble? I find that hard to believe. Did you actually change your name like legally to Josh Snow?
So I haven't changed it fully yet on the legal side. I talked to my dad about it. I said, "Hey, you cool with this?" He's like, "I love it." And my name is so difficult. I have a beautiful Ilizetchi is my last name. It's Basque. It means church house, but it's Elizetxe. It's so difficult. And I said, "Well, wait a second. People have stage names and musicians have names, bands have names because it's easier to share that." And by kind of converting it, it also signaled to the entrepreneurial community, one, this guy's crazy. And two, like this company's not going anywhere because as long as this guy's alive, he's kind of publicly put himself out there accountable. And that's kind of burning the boats mentality that I think indirectly inspired a lot of entrepreneurs to go all in.
All right. Well, Josh, you are the favorite guest I've ever had on this show because of your hat, but also because of the your insights you are imparting. Josh Snow, founder and CEO of Snow Oral Care and a mentor on the show. Going public, the links to that episode that Josh is on, which debuted I guess today. Today's Tuesday, right? And the links to the risks and disclosures are all in the description and in the chat and on screen. Check it out. Josh's drop knowledge on going public, the latest episode. It is a pleasure to have you on Benzinga Live today, Josh, and good luck doing what you're doing.
Awesome. Thanks, guys. We'll see you soon.
All right.
Yeah, have a good one, Josh.
Have a good one.
Yeah.
Oh, I just brought Robert on before he was ready. Sorry, Rob.
Oh, man.
Oh, boy. Anyway, the spoiler alert, our next guest is Robert Roy from TradeWithRob.com. But I feel like we need to let that interview just sink in for a minute because that was great. Josh has been building companies since he was third. He built his first company when he was 13.
Yeah, it's not what I was doing at 13.
13? I was... Gosh, what was I doing at 13? I mean, probably just... Oh, I was playing Xbox. I was playing a lot of Xbox. Like the original Xbox. That's what I was doing. I was playing a lot of like NBA Live 2003, NHL 2004, Enter the Matrix, that stupid stuff. That's what I was doing at 13. So I was not starting a business.
Some people build companies, other people...
play Xbox.
Yeah,
that's it. And some people trade. I want to find out, when did Rob start trading? I wonder when let's ask him. Robert Roy joins us every other week. His website is tradewithrob.com. And let's give Rob a special intro. Rob, when did you start trading?
Hey guys, afternoon. I learned in 1997. I took my first seminar I went to was 1997, March of 97. So that made me 33 years old.
So it's never too late.
Never too late. I have trained people that are 90 years old and I've trained people that are 9 years old. It doesn't matter. You can start at any time.
I think that applies for most things in life. Well, not all things, but most things. So, all right, Rob, we haven't spoken for a minute. How have the last few weeks been treating you? Volatility's been up, so I want to know.
So vols are up a little bit, absolutely. But we're not up too high. I mean, in an ideal world for the type of trades I do, a good mix between buying options and selling options, shorting positions like naked puts and covered calls. I like around that 19, 20-ish level. So we get up to 25, 26, 28, a little bit higher than I'd like, but nothing that is so earth-shattering that we can't trade through it. It just means a little more cost in our positions. Certainly in our put positions, a lot more in the puts, a little bit less in the calls, but there's still an increase in cost there.
Let's bring up your screen, and you can if you have questions for Rob, we will save time at the end of the segment for Rob to take some questions from the chat. But I want to know what he's been trading and how and why.
All right. So everything today, for the most part, has been day trade. A couple that I'm in and out. One that I'm still, or two that I'm still in. One that's kind of flat of those two. But the very first one was the spiders, the SPY.
Okay.
And we really need to look at it. I use two different charting platforms. So we really need to look at, let me pull this one over to the other monitor. And let's go here and look at SPY. Helps when you hit the right keys. Okay, so as we look at the chart, we've got our Fibonacci drawn on there, and we gapped up today, opened up right near this fib level, this 443.38. I've had this drawn now since about the end of January, 25th, 26th, somewhere around there is when we drew this Fibonacci in place. So we gapped up today, and it gave us a little bit of room to the upside as a run, so to that 443 up to the moving average, which took us to about 445.5 or so. We picked up about $1 on an option. Let me see, $1.05 on an option on the SPY today in 5 minutes. So we're in and out of that trade, 933, 938. We're in and out of that trade, picked up $1.05. So I love the SPY. Folks, if you're not trading options on the SPY, you're making a huge mistake. And the biggest reason for it is you have options expiration. Used to be third Friday of the month. That's when I started, Spencer. There was the third Friday of the month was your expiration. Then we came out with weekly options on a half a dozen stocks, and it's grown to 500 or 600 now that have weeklies. But the Qs and the spiders have options expirations 3 times a week, every Monday, every Wednesday, every Friday. So here we are Tuesday. It's one of the most expensive days of the week, right? Because I have 2 days until expiration, and it cost me $8 for the option to buy an in-the-money option with huge open interest and great volume on it today. So it was a good setup. It was a good trade. Tight. You didn't have a lot of wiggle room in there. We only picked up $1, but it's the spiders. Here's the thing. If you could put $800 into a trade and make $100 in 5 minutes, and you can do it only once a day, and you can only do it 3 days a week, is it worth that 36% rate of return for the week if you could do just that? I'm going to say probably.
Yeah, I'd say probably.
Probably, right? I'm sure you have better things to do with your 5 minutes than make 36% in that 3 days, right? And there are days you'll get a much bigger move than the dollar options move that we had in there. We just didn't have the room for it today. So we had to lock that in and take the profit. And look what happened. We backed off. I mean, if we look at it on intraday on TradeStation, here we have SPY, right? And this was the setup. Right? We opened up, we pulled down. It was about a minute in, 2 minutes in, right? 3:33, 9:33. We entered the trade on the bounce, and basically on this candle, we were out. If we flip it over to a 1 minute chart, you'll get a much better view of it where the entries came in. Here we go. All right. So here's 31, 30 to 31, 31, 32, 32, 33. This candle right here, as it stretched down and bounced, there's the entry, and the exit is on this candle here, right underneath where the moving average was. About 30,
which moving average?
This pink line that I have right up here, Spencer, is yesterday's 8 moving average closing price. See, moving averages, here's where a lot of confusion comes in.
It's so subjective, Rob. How do you find
Why is it subjective? Talk to me.
No, I'm not. That was a statement. It is, right?
Oh, okay.
Like the moving averages, right? It's so like the 8 day, the 10 day, the 30 day, the 200 day, the 50 day, the simple, the exponential.
Absolutely.
I'm so confused.
All right, let me simplify it for you.
Okay.
What's the 2 most popular moving averages? 10 and 20. Why?
Okay.
10, 20. It's an easy math number in somebody's head. That's all it was. There's no psychological reasoning behind 10 and 20. There's not. The moving averages that I use are 8 and 21. Why? They are harmonic numbers because they're Fibonacci's, right? Whether you realize it or not, things happen in 8s and 13s and 5s and 3s, and they don't happen in 4s and 6s and 9s. It doesn't work that way. 10s, 20s, even 50 as a moving average. I don't use 50. I use 55. Compare them, folks. Test it out. Now, if you're using an 8 and I'm using an 8 and you're using a 10, are you going to see a lot of difference? No. But when we're talking harmonic and why things trade where they do, 8 and 21, I've tested 4.5 million days of back tests on moving average crossovers. And 8 and 21 gave me the best moving average crossover of any data set that I used throughout that 4.5 million days of trading. So that's where we wound up with 8 and 21. And anything under 55 and under, for me, is exponential. 56 and over goes to a simple moving average. Okay. Right. So when we say it's subjective, it is to the trader, but most traders are just, why are they using the averages that they do or the indicator settings that they do? Because that's what everybody else does. And I'm not saying that you can't be profitable with it. I'm not saying the only system that works is mine. But we've had, in one of our programs, we've had about, I think it's 78 trades so far this year that we've taken in that system. And 72% of our trades are trades that move in our direction.
So do you primarily stick with these two moving averages?
I don't change them.
You don't
exactly. Nope. I mean, I use 8 and 21. If we look at the other chart that I have here, which is my daily chart, there are 4 moving averages on this page, right? And you can see them at the very top. There's the 8, which is the pink line. I think it's pink, magenta, whatever it is. 21, which is green. The 55E exponential, which is brown. And the 5, which is that blue. Now, the 5 is an exit for one particular trade setup. So I don't normally look at that. But even on this page, the 55 is more of a guidance to help me distinguish or establish something that I call the bias of the trade. And we have 5 different biases that we work off of. And once I can establish the bias, I don't have a need for the 55 any longer. We're done. I'm able to just put that off on the side, pretend it doesn't exist. And I look at the other chart then as an example on TradeStation intraday, and I'm really only focused on those 2 moving averages.
Got it. So do you have any like stocks on your watch list right now? Or are you primarily just trying to trade options on Spire, the overall market?
Well, I've got 4 positions right now that I'm looking at for particular setups that I can share with you guys. Let me see. So I don't know what order they're in here. Let's see. Well, it doesn't matter. There's 4 positions, right? So W Day is one of them.
W Day, Workday?
Workday, yes. All right. So here on Workday, we've got this great fib, V top, nice move down, all sideways, strong V bottom. And now we've had this consolidation taking place in here, right? And we've got our lowest close. If we stay where we are now, today would be our lowest close in this cluster about that last 8 or 9 days, right? If we can get that, what I'm looking for tomorrow is a move back up. And today would have been a great day for it if you caught it, but I didn't. So I'm looking at it for tomorrow. If I can get a move back up near this 237.06 and fail, and it doesn't have to hit exactly into that level, right? Now, if it gets up near 238, 239, I'm close enough. I mean, just below it. So 235, 236, just below there, and retreats, I'm okay with that. But I want it to move back up. What I don't want to do is take a continuation move personally. I always look for a retracement, move back up towards the fib line, fail off of there, and I'll take the trade from that. All right. So that's what I'm looking for on W Day for tomorrow.
Got it. And
I don't think I'll see it today, but tomorrow.
Let me see. Okay, Workday does have earnings coming up, but not till February 28th, so we won't have any earnings catalyst this week. What else on the list?
Next one on there is Google. I am a big Google fan. Love them as a trading company. Their thought of world domination concerns me a little bit, but other than that, I think it's pretty good. So nice V bottom in here. Good, strong, bullish thrusting pattern through their earnings. And then they've failed ever since, right? Well, we've gotten down to where we are in what I call a true bear as far as bias goes, Aaron. And what we're looking at there is the 8 is the lowest moving average, the pink line. The green line is above that, the 21. And the brown, the 55, is above that. And remember, folks, you can always look up here to see the levels of what each of the moving averages represent. Okay? So we've got a true bearish bias. Today, we pushed up and we ran right into that 2760 level, right? I missed it. I didn't catch this trade. I completely missed this one today. But what a great drop in the market there as we pull back from that 2760. And right now we're at 2720. So you got a 40-point move to the downside. So I'll be looking for the same thing. That was a big gap and go. If we can pull back up some tomorrow and fail, maybe get back to the 8 moving average, I'll be looking at the next potential down leg in there, especially that we're putting in lower highs and lower lows, right? So I certainly like to see that setting up in there. Lower highs, and now we've got 2 lower lows setting in place.
Yeah,
right? So that's number 2.
I want to keep seeing Google come down because I'd love to add to my position in Google before the stock split comes this summer.
Right. At 20-1, 20 for 1, which is great for those that want to buy it. But I think this almost takes us to where Apple's last split did. And Apple is still a great company. It has a movement every day, but not as exciting as it used to be to trade. I don't have it on my normal list any longer as I look at this every day. And I think for 2.5 years, I've actively traded Apple almost daily on Apple. And today, I can't remember the last time I placed a trade on it.
Yeah, I mean, Apple's just gotten to the point where it's held by essentially every single institution, every single big bank out there. So, once everyone's holding, what's there to really do besides sell? So, yeah, Apple doesn't really move as crazy as it once did.
Right. Historically, after you get to that big blue chip, the Microsoft of the world, when they did massive amounts of splits, Dell, who did massive amounts of splits, you're getting to so many shares out there, and Google now doing a 20 for 1 is even bigger, and especially the way that they rank their shares, that the public shares get 1 voting right and the insider shares get 9. So there's a huge difference in what the value of those shares really are as far as the control of the company goes.
Got it. Okay, so we went through Workday, we went through Google. Anything else on the list?
Yep. So I got Alibaba. I know it's a little bit lower price one. I know for some that's very important, right? It would just have a not as expensive, certainly lower cost on the options, right? So we got up into what would be a neutral bias now, but a great move to the upside today off of that 123.15 level. Same scenario. If I can come back and retest that tomorrow, pre-earnings, come back and retest that tomorrow and bounce, I'll be looking at a potential entry. And Alibaba, we've got them on what? The 24th, I think, is their earnings date for Baba.
24th
right?
pre-market.
24th, right. So we got a nice move up today. It was good move. Didn't quite get the entry that I wanted, but it was a good move. The setup just wasn't there. So pull back a little bit tomorrow, bounce. You'll see some hesitation potentially around that 128 level, which is the moving average. And then you've got 132 as our next resistance. So I'd probably be selling half of my position if we get near the 55 moving average and the other half at around that 132 level. But it will be day trade. I will not be holding it overnight.
Got it. And you said you're going to be trying to do that before earnings or after earnings?
Tomorrow. Oh, yeah. No, it's tomorrow.
Oh, okay, cool.
These are all setups that I'd be looking at for tomorrow. These 4 stocks are on my list already for tomorrow's trades. I don't see the setup happening today. And realistically, if Baba failed all the way back down again, do I really want to take the next bounce today? I don't. Right? I'd rather see it close where it is. Tomorrow we get a correction, a pullback on that. We get near the moving average, confluence of the fib line and the bounce, and there becomes our entry then, Aaron, off of that.
Beautiful. Yeah. And this one from a I know you're just talking about, quick little day trades, but I think for a, potentially a swing trade, if we can see some strength in Baba, like maybe a couple green weekly candles, I think it becomes interesting because we've kind of been trading sideways for the past couple months down here at this 120 level.
Right. I agree. So here's what I need to have happen, Aaron.
Okay.
For me to take a swing trade, the moving averages are in the wrong order. I need almost a complete flip. I need the pink, the 8 on top, the green in the middle, which is the 21, and the 55 on the bottom. Then and only then will I take a swing trade, at least a full swing trade, meaning my full lot. If my full lot is normally 5 contracts or 10 contracts, I won't take that until they're all in the right order. If the 8 and 21, if we get above the 55, this brown line, and it's still not in the right order, I'll take an aggressive trade, so a smaller amount of contracts. My system works off of 10 contracts and 4 contracts. So aggressive would be a 4 contract trade, right? If I can't get it in perfect order. But right now, I'm cautious on anything aggressive because we just have too much whipsaw going on with the markets. The ups, the downs,
Right.
the ups, the downs. It's getting a little bit tough on swing trades to be profitable. Here, Aaron, we had one of our students in one of our programs called Power Option Plays. He took every trade that I called out over the course of the first 3 months or so of the year from last year, and is where he started his test. He measured and did 1 contract of every one in a non-funded account. And he found on the day trades in that 2.5 months, we were up about 42 grand, I think it was. On the swing trades, we were down $2,000. So ever since, he's been very diligent on tracking these. Now, the swing trades have come back. They've gotten better, but he's found that he's completely stopped on all swing trades in his own system, and he's only day trading right now. His name is Scott. Scott's only day trading the positions right now. He's in and out most of his trades in 7, 10, 15, 20 minutes. He's done with most of his trades. He lives in Colorado, still works a full-time job, retiring soon, not by age because he wants to trade or is going to trade full-time. And he said, I'm in and out of my trades before I even leave for work. So I don't have to think about it at work. I'm not wanting to trade anything. I've already placed 2 or 3 trades before I left for work and got out of them. So
Interesting. Yeah, that's awesome.
there's definitely value in it, but it doesn't make swing trades bad. My personality is much more in tune with swing trades. I like to set it up, let it run a little bit, think about it, analyze it at night. Should I stay? Should I go? Add to, scale out. Here, it's boom, boom. I'm in and out in 15 minutes. Whoa.
Yeah, I mean, the type of trades you're talking about, like that other gentleman you just mentioned that does trades in 5, 7, 20 minutes. I mean, what are signs on the chart that show you something is really going to move in that short of a time?
So if we took Alibaba as the example here, right? Let me zoom in on it. If you look at where the moving averages are, you look at where this fib line is, okay? And I saw that BABA was up in pre-market because these 20 stocks, folks, this is it. I don't hide anything. I don't tell you the stocks I look at. These are my 20 stocks right here. They're the same ones you will see on this show every time I'm on. We don't rarely change them. We changed one in the last year, one that we traded out. And when I look at this, Aaron, every night I say, okay, I've got a confluence here, right, of where my position closed. We gapped up. So now I'm going to snap this horizontal line on my intraday chart. I'm also going to snap the value. In this case, they're right on top of each other, but if they were close but not really tight, I would do the 8 and 21. I would snap those on the chart as well. I would snap the 55 on the daily chart, the 5-minute chart, and then this next fib line. And I would label them or lay them all out. Like if you look, I purposely made this line on the top, this pink dotted line, different line than this black line because and I put it there somewhere. I think it's on top, but it's the 8 moving average, right? So I know it's different, just as I would make the green for the 21 moving average. I know what it is by looking at it without having to think, what was that number, right? And my stop would be drawn at red. My target would be drawn in at green, right? Solid lines. And it will help me to just make a quick analysis of how do I take this. Because when you're trading, if you're trying to get into something on an options trade, right? If you had a stock that was, let's say the stock has been moving down slightly and it's moving down towards a support level. Well, the value of the puts is increasing as the stock is dropping. The implied volatility on that option is increasing on the put side and decreasing on the call side. Well, if all of a sudden you get that knife bottom, that V bottom, and you start to snap up, the puts, they're going to suck premium out of those puts and they're going to blast it into the call options. So you could have had a call option that you wanted to buy that was $4 when you looked at it. Now it's 5.25, right? Not the worst thing in the world, but that could be the difference of your profit and your loss of taking that trade. And if you are not set up for it and you have to keep flipping back and forth as if, right now my hands are so tied with one monitor, I trade on 6. right? Plus, I have a laptop going at the same time. If you have at least 2 screens, it's tremendous difference in the value of what you'll get out of it, that second monitor. But by having it all set up on there, Aaron, I don't have a lot of thinking to do. It's more watching what's doing, and I can set alarms right on the horizontal lines to tell me when it gets there or within a certain price of it, right? I could set alarms up to tell me it's triggered, go.
Yeah, that makes sense. I mean, I just feel like a lot of times if I try to get in on a day trade, I'll buy a stock or even on an option, and it just doesn't move that quickly. I mean, if you're going to buy a weekly option for a day trade, you need that stock to be moving quickly, like right away.
Correct. So one of the things we do to pick the candidates on our list, Aaron, is we look at Wilder's average true range. You could use average true range. I like the Wilder's a little bit better. The difference between the two is Wilder's takes into account today's open. Average true range is just yesterday's high, low, and close is what really is used. I mean, not high, low, close. Yesterday's, the last X days of high and low, right? I'm mixing up pivot points. And Wilder's takes into account today, okay? So what we're looking at is, if I go over to my other template, I have a Wilder's average true range of 13 on the bottom. So it takes into account the last 13 days. I really want to see something that moves at least $4 a day. And here's the reason for it. If you're trading stock, the delta on a stock is 1. For every dollar the stock moves $1. Okay, with an option, I'm looking for a delta closer to 65 or 70. So every dollar the stock moves, I've got a 65 or a 70-cent option move. So I already am underwater with the potential dollar amount profit that you could see from a stock versus an option trade. But it is a leverage point, right? I don't pay $200 for the stock. I pay $13 for the option. So to only move 65% of the stock's price is well worth it to me to not spend all of that cash. My rate of return is greater. Dollar amount isn't, but the rate of return is greater, right? So when I look at Wilder's average true range, if you can move at least $4 a day, I'm not going to get in at support. I'm going to get in above. So I give a little bit up there. I'm not getting out at resistance. I'm getting out below. So I give a little bit up there. I'm going to give up a little bit on the entry and the exit of the spread. So on that $4 move, I might have $1 to $2 that I'll pick up of that move, right? $2.50 possibly, right? If it was a good trade. So $4 gives me an opportunity to at least make sure that I get enough move. If you are looking at Ford, just as an example, Ford moves 94 cents a day. By the time you take all those factors into account, you don't have enough of a move in there. Now, barring news, when I've seen that some of the stocks you guys talk about, Aaron, where you have a stock that's $4 and it's up at $6.50 now, right? And it's just been running all day long. And that's very strong news, whatever they were buyouts or whatever the reasons behind them. When you have that type of a setup, yeah, and maybe it's different when it comes to a day trade. For me, utilizing Wilder's average true range helps me to make sure that I don't run into this. And if we look, probably one of the lowest ones I have is Alibaba at 570, and Amazon moves $125 a day from high to low for the last 13 days.
Yeah, I mean, Baba's been weird because it usually is pretty volatile, but like I said, the past couple of months, it's just been kind of trading in this range between like 110 and 130 and not really breaking out or making any new lows. So again, to me, this one, I want to see some strength in Baba. And again, we do have earnings at the end of this month, I believe February 24th. So we'll get some more clarity then. But I think for more of a longer term, like swing trade, that it's getting interesting. Let's see real quick, Rob, if we've got any tickers in the chat.
Sure.
Young Money wants to know your thoughts on CAT, Caterpillar. I believe that's Caterpillar.
Yep, it is. CAT. Yep. So let's see. Let me bring it back over to moving averages. I'm not a fan without it. All right, let me get rid of that bar. We don't need that. All right, very old fib drawn on this. Okay. So Caterpillar right now, we just took a bounce today off of the $200 range, that $200 level, that dot dash red line that's in there is at 200. All right, let me pull this out just a scant there. All right, so we're in what I would call a bearish neutral bias right now. This is too aggressive for me to take a bullish entry. I would wait for the break back down below that 203 level. But I've got 200 right down below it. And you can see we respect that 200 over and over. It's funny. I saw somebody on CNBC last week talking about this 100-point level saying, is this really active again? Guys, I've been using it for 20 years. It's never stopped. 100-point levels on stocks outside of things like the Dow, right? 100-point levels on stocks are amazing, right? As far as stocks gravitating to those points. So I would take it as a bearish trade only if we broke down below that fib line.
Got it. Yeah. Caterpillar, I mean, look, it is what it is. I mean, if you're looking for something more safe, something more defensive right now, you can look at names like Caterpillar, but I'm just never that intrigued by these names.
So if you go to Caterpillar, right, if you really like it, if you think this is going up and you're looking at it for longer term, if we can get into that bullish mode on Caterpillar where it makes a move up, then go and look at a diagonal spread. Right? Go ahead and look to buy an option 120 plus days out. So here we are, June, right? We look for a 65 to 85 delta. So here's my delta column. Oh, wait, I've got it on vertical. Let me change that over. Single. Let's went back again. Here we go. So let's look for that 65 to 85, closest to 65. I've got 69 delta, 176 open interest. Thumbs up. We could take that one right there. And it would cost us $22. So now I own this for the next 120 days. I've got the right to buy it, right? Then I would look at, I mean, we've only got a half a week left now, but I'd look at a delta of 40 in the front week, and I'd sell the 205s at $1.73, right? And that is a way that you're collecting rent on that position every single week, right? If you're bullish on it, instead of laying out for the stock and you want to just take a less aggressive position than buying the call option. See, on this position, if it goes sideways, I still make money. My long-term option is not going to deteriorate much 4 months out from now. But every week, I'm going to sell. I mean, you got $1.73 for a half a week. For next week, you're looking at $2 for a week and a half. So you're probably looking at, right around $1.90, $2, somewhere around there for a week-ish with that 40 delta. Right, if you're looking at Caterpillar.
Got it. All right. Well, Rob, where can folks find more from you and get some more info about these moving averages and other technical analysis strategies?
Yeah. So what I would say to do, Aaron, is go to tradinglikeaboss.com. And on that website, we have nothing but free resources that are available. If you want to know what I do with Fibonacci's, our moving averages, there's a free 3-part Fibonacci training series up there that you can pick up. As well as other resources that are free trainings that we do that are available to anybody. Just click the button, download, and off you go.
Beautiful. Link is in the chat. Everyone go check out tradinglikeaboss.com. Love that domain name. Rob,
the best domain name.
Hope you have a great rest of your Tuesday. Looking forward to next week or the following when we get to have you back on the show.
Following week. Yeah, if you guys ever want me back early, you just let me know. If I'm there, I'll be back.
Beautiful.
Thanks a lot, Rob.
All right, guys. Take care. Appreciate it.
All right. Let's keep this rolling here. Hey, before we bring on our next guest, how many likes do we have? Oh, man. We're doing terrible. We got less than 100 likes right now. Let's get to like 200, I think, by end of show. We got 40 minutes. We can do that, right?
I'd hope so.
That's not a very big ask, I think.
I'd hope so.
That's like every other person right now. Just taking a second out of your life and hit that like button. By the way, guys, if you notice a few people in the chat, they got like green by their names. You know what that means? That means that they became a member on Benzinga's YouTube page. They have custom emojis because they clicked that join button. You go to youtube.com/Benzinga. You click join. $3.99 a month. Get access to custom emojis and more. I don't know what the and more is yet. It's probably exclusive content and days where we only take questions from the members chat, and where we restrict the chat to members only. But we're gonna figure it out as we go.
Did Sony change its ticker?
Yeah, they did.
I swear
It used to.
be
It used to.
SNE.
It used to be SNE. Now it's SONY. All right, let's do this. Let's bring on our next guest. We are rolling through the day. It is 1:20. James Doris is the president and CEO of Viking Energy. Where is my special intro?
Come on, Spencer. Don't.
I wanted to give James a
Give him a
special
special
intro.
intro.
We're gonna give it to him right now. We need a new special intro, I think. James Doris, welcome to Benzinga Live. How are we doing?
I'm well. Good afternoon.
Good afternoon. All right. Oh, I like that picture in the background there. Muhammad Ali. All right. As I said, you're the CEO and president of Viking Energy. It's probably a good time to talk to someone in the energy world. So before we get to your take on the current market, explain to us your strategy, because as I understand it, you guys are transition. You're a company in transition a little bit.
Yeah, we've started to execute on our diversification strategy. Previously we were focused solely on E&P, oil and gas. And it was always our intent, of course, to diversify. And after what everyone in the sector experienced over the last 2.5, 3 years, it was important to expedite that diversification strategy. So in the last 8 months, we've closed a few significant deals for our organization, including one last week that we announced this morning that we're very excited about.
So, okay, explain to us, like, obviously diversification as a concept, right? We all understand that. But you're seeing throughout the energy sector, there are several different ways to go about it, right? You can take the approach of, like, we're gonna pick one or two alternative energy sources and just key in on that. We're gonna kind of dip our toes into a bunch of different ponds, as many ponds as we can find. We're gonna double down on oil and gas and coal and whatever. So what is your strategy and why?
Well, I think it's a combination of things. You have to recognize the dependence on existing energy sources, also understand that the demand for power is only going to increase. So you want to focus on, in particular, our organization, we're focusing on custom energy and power solutions using innovative and sustainable technologies that, in our case, are ready for market, either revenue generating or close to revenue generating, that we believe will generate profits for our stakeholders, number one, but also position us as a responsible corporate steward as we face the global challenges in the energy world.
James, I got to get your thoughts on the state of the energy market right now. Oil is nearing $100 a barrel. What do you make of this?
Well, it's it's better than minus $30 a barrel.
That's true. It's better than negative.
But it's still a period of adjustment, right? I mean, the oil and gas sector went through a very challenging time for 2.5 years. So it's nice to see commodities rebound. Some would argue it's too high. So it's still somewhat of a guessing game as to where it's going to go. So it's a lot of people are still on the sidelines trying to determine, okay, do you pull the trigger on acquisitions? Do you wait? Is it going to go down? So again, the entire E&P sector is inherent with uncertainty, and that's just the nature of it, right? And you have to plan accordingly and not be totally dependent on such a volatile sector.
Well, there's always uncertainty to some extent, but how much of the uncertainty right now do you think is a result of what's going on in Ukraine? Is that I guess on a scale of 1 to 10, how much is that weighing on things?
Well, I mean, that's definitely part of it, especially in the last few weeks. But I mean, there are other factors that have contributed to the increase in price, and the change in the administration, whether you're for it or against it. I mean, it's caused the pricing to change, and it's again, some people don't mind the increase in prices. But to me, swings either way, a dramatic swing downward or a dramatic swing upward, is not good for the market and the sector.
It would seem to be a little bit, I don't want to say not counterintuitive. That's not the right word, but it's almost like the oil market is laughing at I feel like at people like you, James, because for so long it was the price of oil was lower and lower, and companies like yours having to diversify, and oh nope, now you're getting around to diversifying. Oh, now we're going back to 100, right? So it's like I just like, how do you win?
Yeah, we're pretty focused on our plan, and obviously we pay attention to the day-to-day prices, but that's not going to determine our business focus. We were fortunate when oil collapsed. We were fortunate to be hedged on the majority of our oil and gas production, which saved us. When prices go up, you don't benefit from the upside as much. But we've really, over the last 90 to 120 days, have strengthened our balance sheet. We've disposed of assets that were subject to the hedge arrangements. And we're focused on, again, custom energy solutions, power solutions, innovative technologies that, in our view, will generate revenue for the long term.
Yeah, can you give some examples? I mean, you mentioned the deal, the acquisition that you closed this morning. Can you just speak a little bit more to that? Like, what does that mean?
Sure. Yeah. So the acquisition, we're excited to have closed this deal and to be working with the founders of this technology and the other joint venture partners. And this technology, technologies have been designed to detect a down conductor and to de-energize the circuit immediately. In other words, if there's a break in a transmission line or distribution line, power lines, our technology will terminate the power to the line immediately, like within half a second. So before the line reaches the ground or touches anything else that can burn. And as you probably know, down power lines and electrical equipment rank as the top source of incendiary events in the United States.
I did not know that, but that sounds like it's right. Just off the top of my head. So, but what else though? Because you talked about like alternative platforms, alternative energy sources. Like what else are you focused on?
Well, I mean, in last summer, we signed a license agreement where we licensed the exclusive rights in Canada to a patented carbon capture system, which we intend to promote in Canada using our subsidiaries platform. We acquired a majority interest in a company called Simpson Maxwell last year that's been around for 80 years, providing custom energy and power solutions to commercial and industrial clients in North America. And we also just about a month ago closed on a deal where we acquired an interest in an entity that owns the intellectual property associated with a medical waste disposal system using ozone technology to assist hospitals and other organizations with disposing of waste in an environmentally friendly way. So combining these technologies together will, again, demonstrate our responsiveness to the increased global concerns.
So you're more looking at like technologies and IP in the energy and alternative energy space. But in terms of like energy sources or all energy sources, do you have favorites?
Well, I think it's got to be a holistic approach.
Okay.
Right. You have to recognize that oil and gas is not going away anytime soon, but there's nothing wrong with exploring alternatives that are more environmentally friendly, but just have to be conscious of the cost of that.
In what way? I mean,
well, for example, renewable fuels, and we have been looking at a renewable fuels project in the Western United States, and which is important. But on a cash basis, when you just without government subsidies, that doesn't make any money. I mean, and the government subsidies like tax credits, RINs, it's all part of that industry model. But without those subsidies, you would lose money. So you just have to be conscious of that. And then what if the government subsidies go away?
There was, speaking of the government, I mean, there was a really big reaction to when the election of 2020 happened and the Democrats won the White House in both houses. The green energy sector, at least from the public market side of things, like blasted off, and there was this assumption that like, oh my gosh, the Democrats control everything. It's gonna be like the greatest period ever for you. Better get into the green energy space now because you're gonna miss it. And not a lot has really happened. It seemed like there was a bit of a overreaction right off the bat from someone who's actually like into the space. What have you seen out of Washington that would have moved the green energy movement forward?
Yeah, there's nothing wrong with being forward thinking, but you can't be ignorant of what the world relies on right now. And so it's always a sensitive subject getting into the political world, but the administration, if they had a do-over, they might revisit some of their messaging, right? It's you have to think about green initiatives, and like I said, be forward thinking, but it can't ignore reality. So there has to be a transition period, and just to shut off and ignore. I mean, I guess you can see what the commodity prices right now, I think as a result of some of the policies and the messaging from the current administration.
And on the topic of government subsidies, I mean, that you bring up a good point. And a company like Tesla is a good example of for years they if you took away the government subsidies, they were not profitable. I mean, they're way past that now, but it's always like an asterisk because to your point, you don't know if they're going to go away anytime soon. How much like does Viking? How much do you guys rely on that?
Zero.
There we go.
And there's nothing wrong with government subsidies, right? You have to promote innovation, encourage ingenuity, but it's tough if a business model is totally dependent on government subsidies. That creates a dangerous dynamic.
Are you active in the carbon credit market by chance?
Not immediately. We will be with our carbon capture system, but that's probably more 2023.
Okay, I'd be curious to have you back on for that because I find that market to be very interesting, and I mean it's basically it's basically a market to buy and sell credits that offset the damage you're doing to the environment, but it's I don't know. I just find the whole thing to be kind of I haven't quite wrapped my head around it yet. I know it's not new, but I just haven't quite wrapped my head around that.
No, it's been around for a while, and it's becoming more and more prevalent in both the United States and in Canada.
Yeah. James Doris, President and CEO of Viking Energy Group. Good luck on the diversification, James, and have fun traversing this market because it's an adventure. Thanks for coming on today.
Thanks for having me.
All right, let's do this, Aaron. We have a few minutes before our next guest, our last guest of the day.
What did you have? Because I saw something in the comments I wanted to address real quick.
No, I had I saw a couple comments, a couple chatters. Master of Stonks joined, became a new member. Justin M became a new member. You get the emojis. You get emojis of Aaron and me and Mitch and Luke.
That's what I look like in my emoji.
I don't even. Yeah.
I saw someone post their Wordle score in the chat.
Yeah, I got it. I got it on. Wait, what?
I think it's posted like literally in rows.
2, 3, 4, 5.
It's like 3
6,
guesses.
1, 2, 3,
I think.
4, 5, 6. I guess is that 2 or 3? Oh, it says 3 or 6 right there. I also got it on 3 or 6 today.
I think I got it on 4. I kept seeing like tweets about it that people were saying it was like really hard, and I think that almost helped me get it because I was like, oh, it's probably something a little more out of the box. But I have a confession to make about Wordle.
Now that the New York Times bought it, you're bearish?
No, I don't really care. I don't think New York Times is going to change much of Wordle.
What? You're bored of it?
No, not really. No, I still play Wordle on the daily.
It takes 30 seconds. It takes a minute a day. I think it's fun.
I've been branching out and playing some of the Wordle spin-offs.
Oh, there's a college football one.
Oh, really?
I did it, but I'm not good at that, so I didn't.
All right, I'll have to check that one out. The 2 variations I've been playing are called Global, and it's a geography one. So it works like you just guess a random country, and it gives like the country is color coded based on how close it is to the mystery country, and then you guess another country.
Can you put the link in the chat so the rest of us can play?
Yeah. Yeah.
There's a numbers one that my friend always texts me, but I don't.
Nerdle, yeah.
I don't want to play.
I've been playing Nerdle too.
I don't want to play. It's math, right?
Yeah.
I don't want to do math. Why do I want to do math? Why would I want to do math for fun?
All right, here's the global one, and you basically just put countries down, and then so say you guess like USA and Brazil, it'll list USA and Brazil based on which one's closer to the mystery country. And honestly, I suck at geography, so I have to like cheat in this game.
All
So I'll guess countries, and once I know I'm in the right region, I'll have to like look up a real map to see what countries are in that region. But in playing this game, I'm learning.
All right, I'm pretty good at geography. Can we play on the show right now?
Yeah, sure.
All right, I'm not to brag, but I'm
All right.
decently good at
Pull up
geography.
your screen.
So I'm going to share my screen right now. Well, we can get back.
I have kind of an embarrassing one. So the other day it was in the Middle East, and I kept guessing like every single country that was there, and I had like 20 countries guessed, and it was Palestine. The map I was looking at wasn't listing like Palestine as a country or something. I was like, what the fuck? And finally I was like, all right, it borders Israel. It's
Okay. So what am I doing here? Every day there's a new mystery country. Your goal is to guess the mystery country using the fewest number of guesses. Each incorrect guess will appear on the globe with a color indicating how close it is to the mystery country. Got it.
Yep.
All right, click the globe to play. So I just have to guess any country.
Yep.
Any country at all.
Any country at all, as long as it's a country.
All right. Let's go. Whatever. India. Let's go with India.
Okay,
So what does that mean? It means
not very close.
not
Red means you're close. That kind of color means you're not close.
like not at all close.
Yeah, and then once you guess your second one, where it
All
says
right.
closest, it says India. It'll rank your guesses based on which one's closest.
That's also not close. That's
No, but India is closer than Brazil.
how do I see? Am I supposed to?
You can move the map around.
Oh.
yeah,
Really? You can tell that that's a different color? I can't.
No. But based on where it says closest. See,
Okay. Got it.
But yeah,
got it.
it seems like you guessed
right.
two countries that aren't very close to either.
Right. Okay, so now we're getting somewhere. So it's closer to Egypt. And I have 2 guesses left, or 3 guesses left?
Mm-hmm. No. You have unlimited guesses.
Oh.
Yeah.
Wait, so that's not it though, but it's very close. Is that right?
You're getting closer. I don't know how close that is. It's like red when it's like really close. It's still orange.
I mean,
Yeah, you're getting closer.
how do I know when I get it?
It'll tell you.
Okay. Oh my goodness.
All right, so France is the closest you've gotten
This
so
is
far.
going to take all day at this point.
I know.
It's going to go. Oh man. Okay. Non-country name, UK.
Oh, that's pretty close.
I don't want to get political here.
Oh no, UK is closer than Ireland.
Yeah, that's interesting. So, Belgium. No. No. Okay. Wait, what's the other one that's next to France? Oh gosh.
Italy.
No, I don't want to go to. No, it's got to be close to the UK. What is it? Is it? Which is on the left? Is it Sweden? That's in the middle. What's on the left? Norway. All right, it's right here. Oh, it's probably like Denmark. No. What? What's that country in the middle? Gosh darn it! I hate this game now.
Come on, someone's got to get it. I haven't even seen it. I haven't seen it in the chat yet either.
I'm not looking at the chat because I'm afraid they're going to tell me. What is in between here? It's not.
Can you zoom in on the globe?
It's not Germany. No, but is it Liechtenstein?
No.
Liechtenstein
No.
or Luxembourg?
Nope.
How do you know?
Because I already played today's.
What is that country? Come on now.
Someone guessed it in the chat.
They did?
Yeah.
But is that the Here, hold on.
Yep. There it is.
All right, whatever. Iceland?
It took you 16 guesses.
All right. Wow. All right, that was fun, I suppose. That was frustrating, but I asked for it. So
What's I'm gonna try to find the college football one.
I'll send you the link. Who guessed Iceland? JP, congrats. You are smarter than I.
When I just looked up college football Wordle, and the first headline that popped up, Carl Anthony Towns called out after obvious fake Wordle post.
No, I can get you the link after the show if you want. Thank you, Easy Mike. Okay, so we're gonna have our next guest on in 5 minutes. We're talking crypto mining, and he's joining us. Nick Hughes-Jones is joining us from. He's in Australia, so it's like ridiculously early / late for him. So he's the Chief Commercial Officer of Mawson Infrastructure, ticker MIGI. They had some news out this morning. We'll talk to them about that. By the way, guys, I want to preview tomorrow. Tomorrow is a really big day for us. We have on this show tomorrow at 12:15, we're going to have better.com. You guys remember better.com? You remember them? They went viral in December because the CEO fired a whole bunch of people via Zoom. We're not going to have that guy on, but we are going to have the CFO on tomorrow, 12:15 Eastern Time. At 12:30 Eastern Time, we're going to have William Santana Lee, a.k.a. the CEO of Nightscope, ticker KSCP. I know Money Mitch had a great Nightscope trade today on live trading. That stock has been totally viral for some reason. We're going to talk to him about what is going on there on tomorrow's show. That'll be at 12:30. So two big exec interviews on tomorrow's show, back to back. Better.com and Nightscope. Better.com, by the way, is going public with Aurora Acquisition Company. The ticker there is, what's the ticker there? AURC. So that'll be on tomorrow's show. Very exciting for that. What else was I going to say? Oh, yeah. By the way, we will be streaming more earnings calls as the week progresses. I want to bring up the calendar real quickly on my screen, if I can do that.
We still got earnings?
We still got earnings. Can you believe it? We are still in earnings season. Let me bring up my calendar now to show you this week. So tonight, I haven't decided yet. I feel like I want to stream. I want to stream two things. I want to stream Airbnb, and I want to stream the earnings call for Roblox because they're both on the calendar for tonight. So I think that's what we're gonna do. But looking at tomorrow, Aaron, we got Shopify, we got Nvidia, two huge reports. Cisco's tomorrow, DoorDash is tomorrow. A bunch of reopening plays this week. We had Marriott this morning. We got Hilton tomorrow, Hyatt tomorrow, TripAdvisor tomorrow. Wynn is tonight. So Thursday is the big day, though, right? We got Walmart. We got Roku, Shake Shack, Palantir, Dropbox, DraftKings, and Deer on Friday. That should be fun. So tonight we're going to stream the Airbnb and the Roblox earnings reports. Tomorrow after the close, we'll do the NVIDIA report. I think probably just NVIDIA. And on Thursday, we'll do Roku. And maybe one more if we feel like it. But this is the calendar for the week. Next week is kind of the last big week of earnings season this time around. So Tiny Pie, I would stream it all if we had the literal bandwidth and the human manpower to monitor all these streams, but we do not, unfortunately. Anyway, there's a calendar. Check it out. All right, let's do this. We're going to bring on our last guest of the day. As I just mentioned, he's joining us from way over in, I think I always ask him where in Australia, and he always tells me I never remember, so I don't want to guess wrong. But Nick Hughes-Jones is the Chief Commercial Officer at Mawson Infrastructure, ticker MIGI. They had some news this morning on their January mining activities, so let's get Nick on the show. Nick. How we doing?
Hey, Spencer, how are you?
Where, again, are you from?
Sydney, Australia at this point in time.
Okay. You always tell me, and I never remember.
That's right.
So-
We got no rats chewing the cord this time, so we should be good to go.
Yeah, last time we had that audio issue. That was very strange. Anyway, Nick, the reason we're having you on today is because Mawson, you guys had news this morning. You announced your hash rate for the month of January. You ended the month. You produced you mined 140 Bitcoin last month at an average hash rate of around 0.9 exahash, and you were in line with your previously issued Ethereum hash rate guidance of 1.1 exahash, I believe. Correct?
So we only mined Bitcoin, so no Ethereum mined at all under the Mawson banner. So we were 1.1 exahash at the end of January, 1.35 is the guidance for the end of February, and we only mined Bitcoin.
Wait, that's weird. I could have sworn I saw a thing about Ethereum, or my mistake. I don't know where I saw that then. It's in my notes here. I don't know where I saw. I must have seen that somewhere else, and that was not you. I apologize. So, okay, so 140 Bitcoin mined in the month, 1.35 exahash. So that comes out to what? It's like 6.5 Bitcoin a day?
Yeah, so that's approximately 6.5 Bitcoin a day produced at the end of February.
And just how does that compare to prior to recent months?
So we're on a steady, on a rapid growth trajectory, actually, Spencer. So we're 1.1 exahash into January. That'll go up 3x into the middle of the year, 3.35 exahash and 5 exahash, so nearly 5x by the end of the year. So we're in hyperdrive, as we call it internally, operationally.
And how is that possible? Is that just a result of more machines, more computers, more miners?
Yeah, so it's a good question. So we went very, very long the infrastructure last year. So we bought, over 40,000 Bitcoin miners. We've got 200 modular data centers, which are your sort of containerized modular data center solution, 100 electrical transformers, and we get our Bitcoin miners delivered on a monthly basis. So it's just the build out that we'd planned for and paid for last year.
And where do you get your power from?
Yeah, so a couple of places. In Pennsylvania, we just signed a 5-year PPA for 100% nuclear energy, and we've done that with a company called Energy Harbor, and they've got 3 nuclear reactors around Ohio and Pennsylvania. They've got Davis, Bessie, Perry, and the Beaver Valley nuclear reactors.
Okay.
In Georgia, we're on the grid, so it's approximately 70% nuclear, 10% hydro, 15% natural gas, and 5% coal. But the really interesting thing about Georgia is we've got 2 brand new nuclear reactors being built there over the next 12 months. They're 2 1,100 megawatt monsters. So we would hope to see lower energy prices, but certainly a lower carbon footprint in Georgia.
Just to clarify, because I know someone in the chat's going to ask me this, so
not the country, the state.
I preempted you. I know someone was thinking about it, and so I just preempted you. Georgia, the state. Just to be clear, I don't know if anything comes out of Georgia, the country. Honestly, maybe something does. I'm sorry if you're in Georgia, the country, right now. Mountain Tactical. Are you from the state though, or the country? He says I'm from Georgia. I'm assuming he's from the state. Okay, so nuclear. That's interesting. Tell us more about that.
Yeah, for sure. So look, it's a fantastic transition energy as we go from a fossil fuel world into a full-on renewable energy world. I think what you've seen from recent energy price spikes globally is that going cold from fossil fuels to renewables is cumbersome because we don't have the infrastructure in place yet. So nuclear is a fantastic option as a transition energy. So it's something we've focused on as a business. The other facility we've got in Australia is actually a 100% renewable energy biomass plant on the east coast of Australia. So we're trying our hardest to be one of the more sustainable Bitcoin miners on the NASDAQ. But we're big fans of nuclear internally.
Can you give us that breakdown one more time? Because I think that's probably the most important thing. You said 5% nuclear.
No, so this is in Georgia. So in Pennsylvania, we're 100% nuclear energy, and we've got 100 megawatts of energy available there. We'll be rolling that site out over the course of the next 12 months. We'll actually energize that site with the first nuclear molecules in March, 50 megawatts, and another 50 megawatts in June of this year. So that's an exciting new facility for us. But what you're referring to is actually the Georgia grid, which we draw energy out of. 70% nuclear approximately, 10% hydro, 15% natural gas, and only 5% coal. We actually hope and expect that as those 2 nuclear reactors come on, that's Vogtle 3 and Vogtle 4, that coal component of the energy will be squeezed out of the grid.
I realize now where I saw the I read exahash as Ethereum. I read EH as ETH for some reason. I don't know why I did that, but because you had given guidance this morning, which you'd already said here that you expect to be mining at a 3.35 exahash by Q2 and 5 by Q1 of next year. And for some reason, I saw that and I read, oh, that's Ethereum. So, do you have any plans to diversify on that front or no? Not yet.
No, we don't. Look, we looked at it at a level. I know some other miners are out there doing that, but we couldn't hand on heart go and spend $100 million of shareholders' capital on Ethereum when it's due to undergo a change from proof of work to proof of stake in the next couple of years, and we don't know what's going to happen beyond that. So we like Bitcoin mining. We know how to do it well. It's a big market. I think November last year was the biggest revenue, $1.7 billion for the month for Bitcoin miners, which is around $20 billion annualized. So it's a huge market, and we're expanding into it rapidly. It's very liquid, so we prefer it.
Ron Hollick in the chat says, I own Riot. Is this due to my competition? Yeah, Ron. Yeah.
Riot's a competitor. Look, Riot have done a good job. They're a good business. They've also focused on the infrastructure piece early, which I think is a critical and strategic advantage in this industry this year because everybody's very short energy and energy infrastructure. Riot's got a big facility down at the Windstone facility in Rockdale, Texas. And equally, we've been building out our facilities around the US and in Australia and really focusing on that infrastructure piece.
Can you reiterate on the timeline of production for the Georgia or completion for the Georgia facility?
Yeah, so we got an additional 60 megawatts of energy turned on around New Year's Eve. So it was a big night for different reasons for our operational team in Georgia late last year. And that facility's got 100 megawatts of energy available as a phase one, and we believe that can ultimately get up towards 300 megawatts over time. Equally, the Pennsylvania facility is 100 megawatts as it stands today, and we think that can get similarly large over time.
What else does the public have to look forward to aside from the continued production and as you attempt to hit your guidance that you just gave this morning? Is there anything else that we have to look forward to?
Yeah, for sure. Look, it should be a really furtive news pipeline for us. We've committed to doing an operational update monthly that'll come out around the middle of the month. We've obviously got the 4 Qs that come out throughout the year. Mm-hmm. We're always looking at new sites, new facilities, new strategic partnerships, new Bitcoin miner orders. So, a typical Bitcoin miner does a couple of things throughout the year. They add more Bitcoin miners, they stand up new facilities. So you can certainly keep your eye out for those type of things.
Nice. Have you haven't announced when your earnings are going to be yet, have you?
We haven't yet. We've gotten to around the 15th of March, I believe, and we'd look to be doing it before then, but the date hasn't been set yet, but we'll put out a full announcement around webcast details.
Quantum in the chat wants to know, where are your fusion reactors? Oh, man.
So there's 3 nuclear reactors. They're actually pressure water reactors that we use via Energy Harbor. And Davis, Bessie, Perry, and Beaver Valley are located in Ohio and Pennsylvania. In fact, it was a blast. It was the first nuclear reactor I'd been, 100 meters or half a mile away. Beaver Valley is around about a mile from our facility in Pennsylvania. So we drive past it as you come in and out. It was a real blast.
What is that like? Besides being a blast, what is that like? I've never been.
Oh, it's just amazing to see that amount of energy come out of such a small, relatively speaking, building. So I've never been up close and personal with one before.
Yeah, I would imagine it'd also be a little bit terrifying.
A little bit terrifying. I'm actually hopefully due to tour Vogel 3 at some point in the first half of this year, which is one of the new reactors going in there in Georgia. So, yeah, I take your point. Might be a little bit spooky, but I think it'll be equally. Well, blast is probably the wrong word. Exciting.
Unintentionally funny there, I think, probably. Yeah. Nick Hughes-Jones, the Chief Commercial, Tiny Pie is right. Nuclear and blast are probably 2 words you don't want to hear together. Nick Hughes-Jones, Chief Commercial Officer at Mawson Infrastructure, again out with the results of their January mining this morning and giving us guidance on what we can expect in the upcoming months and quarters. We'll look out for that quarterly report, Nick. I know it's very early for you, or late, depending on how you want to look at it. So thank you for hanging out with us today.
Thanks, Spencer. Anytime. Appreciate it.
All right. Oh, I'm sorry. I did I misspeak on the fission fusion thing? Sorry. I can never get those. Can never get those straight in my
Do you
head.
need to go back to like 10th grade chemistry class?
Yes, so badly. I can't handle. Yes, I do. Is the answer to that question. Chemistry was really hard for me.
Khan Academy, man.
Oh, you're right. That's what I should do. No, anything that involves math is not my strong suit. Ironically, with the exception of like stock, like I can do like math as it relates to like stocks and stuff, but like because it's all just percent change basically. But any like equations, and it's not my bag. Anyway, all right, we got 5 minutes left here, so here's the plan for the rest of the day. We are not going to do a live roadmap today. We are going to do a replay of our Solana episode, I believe. That'll be coming up at 2:00 because we had like two-thirds of the crew either sick or out or busy today. So we got the roadmap coming on, a replay 2:00. We're gonna have At the Close with me and Joel at 3:30. We will have Cannabis Insider live at 4:00. Money Mitch at 4:30, and at some point in the after hours session, I should probably find out when. As I said before, we will be streaming the Roblox and the Airbnb earnings calls. You know what? Let me just look that up right now. What time do those calls start? We have it. The information. It's in Benzinga Pro, so you don't even have to really go very far.
I'll do Airbnb.
Let me look up the time first. So
Airbnb is at 5:30 p.m. Eastern time.
The call is?
The call is.
All right. The Roblox call. So Airbnb is at 5:30. The Roblox call is at we do not have this in Benzinga Pro. Not great.
All right, I'll get you Roblox.
Not great, guys. Not great. All right. What else did I want to plug?
Roblox is at 5:30 a.m. Pacific Standard Time tomorrow morning.
What?
8:30 to 8:30 a.m. tomorrow.
All right,
morning.
we're not doing Roblox. Sorry. We'll do Airbnb. That's what we'll do because they're tonight. Okay. I wanted to plug the membership program. I did that. I wanted to plug Benzinga Pro. I did not do that yet. Hey, everyone, do you guys have Benzinga Pro? No? Do you want Benzinga Pro? Yes. Better, do you want it at a discount? Yes. Get 25% off Benzinga Pro. Click on the link. I'll put it in the chat right now. It is also in the description and on the screen as we speak. Free trial at pro.benzinga.com, but 25% off at the link I just put there. Not half off, Solar Up. Come on now. We got to eat here, right? We have a business to run. 25% off Benzinga Pro. Real-time news, fundamental data, charts, calendars, movers, signals, squawk, a chat. You can chat with our news desk. You can literally bug the guys on our news desk and say, yo, Benzinga, why is the stock up today? And they will find out for you.
You guys can chat with me on there too.
You can chat with him, but you can also just chat with like
cooler people.
As
well.
Like you can say, hey, Benzinga news desk, what's up with the stock today? Why is it down? They will find out for you, and then they will tell you. Thank you, Mountain. But use the link that I gave you because I want to be able to track when people come from this show. That's important to me. So check it out. Link in description, in chat, and on screen. pro.benzinga.com. So, Aaron, can you put for Serena again the link to the geography Wordle?
Yes.
Oh wait, no, actually I have it here. Oh no, I don't have it. I lied. Yes, I do. It's called Global Serena. Here you go.
Yeah, the Nerdle one is it's definitely like it's kind of cumbersome. Like you have to get through it. And once you do it a couple times, it becomes like a fun little math game. I actually really enjoy the Nerdle one.
I refuse to play it on principle. Okay. I asked before if we can get to 200 likes. We are nowhere close. We are at we're at 121.
I need a new stock to buy. Someone got any ideas?
Yo, a couple hours ago, I thought I was up so much money in BCRX. I'm not, because I top ticked it on Thursday. So go me. That was
what was your cost basis?
What was the high on Thursday? That was what I paid.
High on Thursday, like 1870.
I paid her like 1860.
Okay, well, it's at 1870 now.
All right, I'm in the black. Fun. Anyway.
Shouldn't it be in the green?
No. I think, well, I don't know. I guess it depends. Are we talking about like gambling or, because I always think of it like gambling, like black, red, right? Or like balance sheet, right? Red is bad.
Right.
Black is good. You're in the black.
Yeah.
I don't know.
That's fair. All right, y'all.
Whoa, happy. Oh, I thought Quantum said it was his birthday. But he didn't.
Oh, what's Zim doing? Let me check in on Zim. That's one of our shipping stocks. We like those.
How is Zim?
Oh my god, up another 5%. This thing's a monster.
Yo, Zim shipping.
Absolute monster.
And Neo options apparently. How is it? Wait, what? Let me pull up Neo real fast. I'm not going to pull up an options chain. I just want to look at Neo. Where's my
DAC?
Where's my Benzinga Pro? I lose my. There we go.
Oh, it is Ripster's birthday. It's true.
Oh, happy birthday, Ripster. Wow, Neo's up 7% today. All right, we got to hop. The roadmap replay coming up right now. Everyone, will catch you guys later. Hit that like button for us. Subscribe if you haven't already. Check out Benzinga's membership program on YouTube. And that's what I got here. So we're done. Bye.
Peace and love, y'all. We'll be back tomorrow.